We are back with episode 6 of season 4 of We Do a Little Pod, and before we jump in, I want to highlight some big news we announced for this season. Season 4 is officially powered by Arbitrum, and our content is now redistributed across Rug Radio and Decrypt's platforms. Annie and I have been massive fans of Arbitrum since they launched, and both of us invested in Off-Chain Labs' Series B back in 2021. This is a full circle moment for us, and we couldn't be happier to partner with Arbitrum for this season. If you've never felt the frictionless transactions at lightning speeds on the world's most decentralized L2, what are you waiting for? Head on over to portal.arbitrum.io to check out their growing ecosystem where you can explore 600 apps and even participate in missions to earn points. Without further ado, let's dive into this week's episode. In this week's episode, we sit down with Spencer Gordon Sand, the mastermind behind Spencer Ventures. Before launching Spencer Ventures, Spencer was a competitive fencer, Magic the Gathering player, and startup enjoyer. We dive into Spencer's investment thesis behind NFTs and how his fund invests, finding and buying distressed assets in a bear market, point farming optimization, a peek behind the 3AC liquidation and dickbutt buys, and so much more. As always, this podcast is for entertainment purposes only and should not be relied upon for investment decisions. Andy, Dees, and guests may be invested in companies or tokens talked about on this podcast.
This is Andy.
Yeah, I'm Dees.
We're back again with another special episode of We Do a Little Pod. Our first guest who was supposed to be here did not show up, so rest in peace. We had to find a replacement, and we got the best replacement possible. I threw out a tweet. Our friend Spencer Gordon Sand was like, I could be there 20 minutes. I was like, dude, get here ASAP. This is perfect. So here we are. It's Friday morning.
Not Monday.
Not Monday. Friday morning here in New York, our last day of the week filming the pod, and we're here with the founder of Spencer Ventures. So Spencer, thanks for taking the time out of your day. Thank you for checking Twitter at the perfect time and messaging me.
Dees, thanks for having me. And, I'm glad I'm your favorite second best host.
Dude,
come on, guest.
I put out that tweet, had a couple of people respond, and I was like, all right, I'm going to wait a few minutes. And then as soon as yours was like, okay, that's perfect. Because this season, the theme has been a lot more like we want to talk to builders, we want to talk to more investors, we want to talk to more degens. And I feel like you kind of fit the crossover of all three of those.
We are institutional degens over at Spencer Ventures. So happy to chat about what that is and what that has become.
You're the second ever backup guest, and the first one was really good. So you have a lot to live up to.
Yeah, you got a lot to live up to.
Yeah.
And I know that I gave you a big itinerary and we planned a lot for this. So why don't we start off and let's just talk about like Spencer Ventures. How did that come up and what is it?
Yeah, so I've like got a weird path in life, right? Like I used to be running startups myself, was kind of doing that, and had some funky outcomes during the pandemic, stepped back a little bit, spent 2 months just like working out and like not talking to anyone in a business context, and kind of had agitas to like get back into things, right? And I reached out to like the nicest investor that I knew in Chicago, which is where I was living at the time, and was like, hey, I don't really know what I want to do with my life. Like, are any of your companies looking for advisors, like hiring? And he was like, well, like my wife is pregnant and we just had this big exit. Will you help me redeploy a bunch of capital? And so I fell into a group called Lofty Ventures with a guy named Chris Deutsch in Chicago. He and I were venture investing. And in the past, when I'd run my companies, I used to like buy and sell Magic the Gathering trading cards. That was how I bootstrapped like my startups. And so
I love that.
I was like venture investing in like seed and pre-seed stage companies and like had this trading card background and like just was on Clubhouse and stumbled into some room where people were making ape sounds and was like, oh, what is this NFT thing? And I looked into it and I was like, oh my goodness, this is just venture investing, but with trading cards. Like this makes lots of sense. And was kind of right place, right time. And so in the last cycle, I was basically just trading out of my like personal account and did quite well. And like in December of 21, sold most of what I was holding to cash, and like my significant other was like, oh,
very good timing.
Well, so not quite cash actually. My significant other was like, oh, like we have money now, and I was like, even better. Now we have really shiny trading cards. So I cashed a lot of it out back to Magic the Gathering trading cards, and it was funny because in like beginning of 22, right, I was like hanging out with my like Magic the Gathering trading card friends at like tournaments, and they're like, oh my goodness, like our Magic cards are down so much, and they're down like 5-10%.
Like nothing.
I used $4,800 ETH to buy these,
Yeah.
and ETH is like $1,000. Like
You were like, I'm
chilling.
actually up 5x still on this. If I just
Did
held
you
the
start thinking like, fuck, I gotta sell these Magic cards?
No. I mean, it was because like the thing for me was like I had sold out of Magic in like 2016 because I was running a company. It was one of my as a startup does. We hadn't like hit our stride yet. We hadn't found venture capital, and I was like, I either need to fire employees, not make payroll, or sell some cardboard. And when you're in a life point like that, it's pretty easy to just
sell
make
the
the call,
cardboard.
just sell the cardboard,
It's the
right?
cardboard.
And
Yeah.
so I'd sold basically entirely out of Magic, stopped playing the game. And I had this moment where I was like, I can buy back in. And not only can I buy back in, but I can buy the rare first printing shiny versions of all the cards I sold. So it doesn't feel as bad. And so that was like more of a personal thing. And I had always told myself I wasn't going to buy back in until it was money that I didn't have to think of as money. Right. And so like the luxury that crypto afforded me there was that I was like comfortable enough with my financial position that owning Magic cards, which used to be a largely financial thing for me, right? I was a buyer and seller. Like I always thought about the number value. I just bought the cards that I wanted because I'm a collector first. And like, I didn't have to think about it. It could go up, it could go down in price. Doesn't matter because it's just the cards that I want to play the game
That's
with,
the best
right?
feeling.
And so that was a really good feeling to me. And then all of that segued into, I was close with a family office based in Chicago, which was the Pritzker Group. And they were like, hey, we're looking for someone that kind of knows this NFT stuff and we want some exposure. And so, they're an incredible group to work with. They used to own most of Hyatt hotels and like half of Ticketmaster. So they're like this very large family office. And I didn't like set out like, hey, I want to go raise a fund and like get into this. It was just kind of like, oh, this is a cool opportunity. And not only a cool opportunity from like an opportunity for me, but an opportunity to bring someone into the space, right? And I always feel like whenever an industry or a space gives you so much, it's kind of on you to give back to it in whatever way. And so I fell into this role of like, okay, I have this background in venture capital, but also like I degen trade like on my own capital. And so importantly, like Lofty Ventures was all our internal capital. So we were a lot looser in like what we could do. So if I just wanted to toss 10 grand into some monkey JPEGs, like I could just do that. And so that was the emergence of like Spencer Ventures was through that communication and some of those backers. And we've grown substantially in like what Spencer Ventures is. We're about a year and a half into it. It's been a really exciting journey.
And so is it one fund still, or have you raised multiple funds inside of it? What's the structure a little bit?
We have over time taken additional capital into Spencer Ventures, and we have some really incredible backers. Many of the very large funds in the industry are LPs in our fund. One of our big selling points to our investors is not only financial returns, but learning the industry. So one thing that we do, which is very different from I think most funds, is actually once a month we have a call with all our LPs where I go and I talk through just like what's going on in the market, kind of what are the behind the scenes conversations we're having, what are some of the trades we're doing. I'll share monthly written updates as well with our LPs. And so the pitch to investors has always been, we have really good returns, get some great exposure, but also like if your good exposure is the only thing that you got, like we kind of failed in our mission. I want you to learn this industry. If you're not crypto native, if you're not NFT native, become crypto native, become NFT native. And whereas in the beginning, our pitch was mostly to like Web2 family offices who want to get into crypto in general. And I think this is a good flavor of crypto to get into. It's evolved into very crypto native investors are actually investing with us, who are crypto native in other parts. Maybe it's DeFi, maybe it's, other things, but they want to understand NFTs better. And so, we work closely with them. We also, a lot of our LPs are other funds that do venture investments. And so we're able to help share with them, okay, here are some of the interesting companies that we think you should take a look at. We've been a stakeholder in them through their NFT for X period of time. Like, let me hand that off to you. This is our opinion based on how we've seen them operate as they're going to evaluate them for later stage raises, right?
And like potentially help with deal flow there and everything.
100%, right?
Cool.
It's definitely about deal flow. And it's also like, we want them to feel more comfortable making their own decisions, but we'll also give our input, right? And so at the end of the day, if an LP learns over the course of every month getting on a call with us, right, and learning, they should feel, I mean, if we've done our job, they should feel more comfortable evaluating things later because they understand what narratives are going on. They understand other things like that.
Do you kind of taking a step back before this, when you were working in the startups, like what were you doing in the startup realm that prepared you for all this? I feel like it's a pretty big jump going from like, and we could talk a little bit about like fencing and some other things too. But like startup realm, what was your first startup? Like what?
So the first startup, so I'm going to go a little out of order here. So I used to be a competitive fencer. I actually didn't go to college after high school. I used to fence like basically full time. I was doing World Cups, Grand Prix for the US. And so I was like fun employed, right? And so I needed a job that was flexible with me traveling to random parts of the world once a month and traveling to some random part of the country like once a month and like really needing to be out on time to go to practice. And like, so a startup was like the only place that I could get a job at. Started working at a company called Guru. We did like, it was an ed tech company. We did like Uber, but for tutors. And I won as a really big contract with the Department of Education there. And so I started like as an intern and got promoted to C-suite in like the first couple of months.
Crazy.
Which was a pretty crazy trajectory, like straight out of high school. And like the joke at that company always was we were doing ed tech, but I was uneducated. And so like we raised venture there. We kind of did that whole thing. But ultimately I stepped away from that company amicably. Like it wasn't because the company wasn't doing well, but I was like, I should get an education. It was clear to me at that point, like I got like my highest like world rank in fencing was 500. To make the Olympics for the US, you need to be like top 16. And so like I was good, but never like in contention for the Olympics. And so it was like, okay, I did this. I should do the school thing. Went to the University of Chicago, got an economics degree. And so, there I was, my title was Chief Strategy Officer, I think, at Guru, Chief Strategic Officer or something like that. Was executive at like 3 more startups, venture-backed one of them, had a small exit on one of them. And then one we raised at a $125 million valuation a year and a half into it. Kind of had some crazy rides up and down, good business experiences, some bad business experiences, but then like ultimately ended up in sort of seed and pre-seed stage investing. So it's been kind of a meandering path. I would say I've touched roles of like, usually more on like the marketing side. But it's a startup. You kind of do everything, right? So
you got to do a little bit of everything.
I think the big thing though that came from that, which is helpful in this, is like one of the big things, the 2 big things in startups, right? One is that you're always selling, right? You're always selling to customers, you're selling to investors, you're selling to good employees to hire, but you're also like figuring out how to work with people and watching people work with each other. And I think one of the things that's really underrated about how you evaluate companies in crypto and NFTs is most crypto and NFT companies are like just early stage companies, right? It's what they are. They've been around, especially in the first cycle in 2021. People knew each other for like 2 weeks and they launched a company that was worth $300 million, right? Like this is a crazy, crazy thing that happened. And it turns out it's really hard to grow into a company that's worth $300 million when you've got a bunch of people you've brought together after 3 weeks. And so one of the things I think I noticed quickly in NFTs was a lot of the bigger companies' problems were really like people problems, right? And this is like the number one reason that a startup fails is co-founder drama. This is like not often talked about, but this is really what goes on at like startup land is like people working together is a tough thing. And like, it's really hard to get right. So, having, I think a little bit of experience, like being part of like team dynamics, like watching that play out. And then from investing in them, like sitting and watching like a ton of that play out, it's like, it's really not that different, right? At the end of the day, there's a bunch of people who got together to do a thing. They're trying to figure out how to manage doing the thing. And you can see who knows how to manage people and scale versus not, right? Like it is meaningfully different. Like when you get on a call with a team, like what is their org structure? Oh yeah, like we're all just doing it together is not an org structure. And like, I don't know how many people I've had to tell that to you.
We're all doing it.
I got on a call one time with a team and they were like, I was like, what is your biggest challenge? They're like, we need a metaverse HR company. And I looked at them and I said, have you tried just like an HR company? And they're like, oh, this is just the fundamentals of running a company. And I get it. Like this is, it's such a dual mandate, right?
It's a very Web3 thing.
But the thing is like, if you're too Web2, it also doesn't work, right? Like if you're too like, oh yeah, a lot of the companies that were too well put together, didn't attract like the right flavor of degen to the company, and it becomes like this too polished thing. And
that was actually a challenge that we had with Fractional and Tessera back when we were doing it, where we very much so just we didn't hire enough people who like really deeply understood crypto and like lived and breathed crypto. And then like, you know, me and Deez and a few others are like crazy degens, and I'd be like, guys, we got to do this thing. And it's going to sound a little fucking weird, but we got to do it. And everyone's like, I don't really understand. And so we would have to spend way too much time like bringing everyone up to speed on whatever these like crazy crypto ideas were. That was definitely a challenge that we had.
Yeah. And I think the thing that is important here, and like how I would think about it, right, is like you want to be tactical in how you break the mold for how to run a company, right? Crypto is about breaking the mold for running a company, but like being tactical in that requires two things. One, you have to understand what the mold is that you're breaking. This is a failure point of a lot of teams. They're like, oh yeah, we're just doing this, that. You don't need to reinvent the wheel on everything. But then like, okay, what parts of, how do you hack past certain steps? How do you do the thing that is more about vibes, right? Like how do you make it happen? And that's like the secret sauce, which is honestly really difficult.
What was the transition from you working at the startups to getting into crypto?
So I had like always had some crypto. So actually my friends and I used to buy, like if you didn't remember to get someone a birthday present, you would buy them Dogecoin was like our thing back like when Dogecoin first came out.
That's nice.
And so like,
how did you find out about Dogecoin? Not to interrupt.
You know, actually the first crypto I ever found out about was Coinye Coin. If you remember this. So Coinye Coin, there's an episode of South Park that Coinye Coin is based on. And Coinye Coin was bigger than Dogecoin when the two of them first came out. However, Coinye Coin got sued by Kanye. And so this was like one of the first and there's actually a funny story too. So none of us in the 2020 run could find any of our Dogecoin, right? Because it was like a gag gift. We're not even sure we really gave it to each other. It was just
were we even sending it back then?
But we did stay at my friend's dad's country house, and he like managed a hedge fund, and he sent us we had gifted him like $50 of Dogecoin, and he sent us a screenshot of him cashing it out for $500,000 in the last bull market, and was like, let this be a lesson never to like get rid of your gifts or like not treat your gifts properly. We're like, man, wow.
It's like 7-year hold.
Yeah, well, I mean, obviously it was mostly like you forget about it, right? But then you check and it's like, oh, it's up 10,000%.
When you see Elon on SNL talking about Doge, you're like, shit, like I need to go sell it right now. So what brought you from just like, shit sending Doge with your friends as a meme into the greater crypto ecosystem?
So I'll be honest, I was a huge crypto skeptic for a very long time, and NFTs was the thing that made crypto make sense to me. And I'll tell you why I was a big crypto skeptic. I was a big crypto skeptic because I saw crypto as two things really succeeding, right? It was infrastructure for ecosystems. So like that's your Ethereum, that's your L2s, right? And like trading platforms for trading infrastructure, right? And so you have infrastructure and infrastructure for trading infrastructure, but then like there's nothing in the infrastructure, right? Like I hadn't seen a use case that made sense to me and felt compelling enough. And so, yeah, you can take the view of like, all right, like it doesn't really matter. You can remove emotions from everything and there's money to be made, this, that, the other, but I didn't get it, right? Like I don't think crypto is a very good currency. You could think of it as a risk asset, but like really like there was, I think, a long time this narrative that crypto is a new currency, and currency is moving up and down in price is not a good function of currency, right? It's like this fails at like the very fundamental thing it seems to try to do. But what made sense to me, and this has always been my thesis here, is I think that like NFTs are a very are the private markets of crypto, right? And so what happened is when people would try and launch projects in crypto in like 2016 cycle, you'd have a $500 billion market cap, and you're like a 6-week-old company. And it turns out it's really hard to build a company like that. And we don't really do that in traditional markets. Imagine if people launch companies and they IPO. Like we did that for a little bit of time. Very famously, B2B.com IPO'd on just a domain name, right? But that was the tech bubble, right? Mm-hmm. That never came back in the way that it did. But like, how do you have an ecosystem that is healthy in a way where you can have piecewise growth of a company, right? Companies should start small and grow over time. And that's to me what NFTs are. And the big aha and unlock moment where it went from this is like a thing that I'm doing on the side to like I should make this my full-time thing, for me was ApeCoin. And the reason it was ApeCoin was I actually think if you look at the path of Bored Ape Yacht Club, it's very similar to a startup. If you think about the first mint as a pre-seed round, right? Second mint, which was Mutants, as a seed round, then you go and you raise a venture growth round. Venture investors got a token warrant. And then instead of your exit liquidity on everyone in the private markets being an IPO, so in traditional markets, you have pre-seed, seed, growth, IPO. NFTs, you have mint the parent collection, mint the secondary collection, do a venture raise, then you do not ICO, it's not the right word, but you release a token, right?
Yeah.
And so who got the token? Well, people that were venture investors in the later round got the token because they had token warrant, but then also so did stakeholders in other flavors, right? And so NFTs, and why is it profitable to have that transition? Well, in traditional markets, right, you have less money in private markets than in public markets. And so when you IPO, you almost always make money because there's more money in public markets than private markets, right? Well, in NFTs, this is actually kind of the same thing, right? There's more money. I think this is a structural thing. There will always be more money in like ERC20 fungible tokens than in NFTs. Why? Because custodially traded platforms like Coinbase, like Binance, allow for a much larger size of fund to exist, right? And so when you have custodially traded things, you have more liquidity. And so if there's more liquidity in coin market than in NFT market, NFTs can have a lower market cap than an exchange listed coin can, right? And this is a good and healthy thing because it allows them to grow over time. Now, in terms of a 2-year IPO, that was pretty quick for Bored Ape Yacht Club. But like, if you look at where I think a lot of other projects are headed, they've been out now. Maybe there's some that have been 3-4 years, 2-3 years, right? That are building towards a token. And I think that makes sense to me. Like, if we're redoing all of finance here, if that's what's happening in Web3, it's just, this is new finance, right? Coins to me feel like public markets, right? And to have a healthy financial ecosystem, you need some flavor of private market, right? And so NFTs being private markets for companies, so long as you think of stakeholdership in that, like there's this tacit thing where you ultimately get a token, is super interesting, right? And NFTs have this incredible legal defense, right? So like the problem with having private markets in crypto has been, oh, it's security, this, that, the other. If it's just like an accepted convention that NFTs get an airdrop of the token from the company, that maybe is good enough. And then NFTs as art, NFTs as trading cards, right? Like there have been lawsuits against Magic the Gathering for like casino laws, right? Mm-hmm. And they have won. Like, is a trading card pack like gambling, right? Is a very interesting legal question that has been settled. Like there's precedent. It's not. Right. And so it's very hard to come against NFTs, I think, right? I'm not a lawyer, but this is my interpretation. Without going and saying art's a security, without going and saying trading cards are security. And because of this, NFTs can perform this really interesting function, right? Of being a private market. Now, it's different than private markets in like Web 2 for a couple of reasons. One is NFTs like obviously are liquid and tradable all the time. And this is interesting to watch. Like you don't have liquid markets for pre-seed and seed venture equity.
Yeah. And there's a pretty good reason for it as well. And that's where I think there's like a nice, meaningful difference.
Yeah. Yeah. And there was royalties. Like there are meaningful differences, but
and they also don't have the same like investor protection-y stuff.
Yeah. I mean, if you start a startup and you go raise venture in Web 2, you can't take investors from all over the world. There isn't a permissionless aspect. And so like, if we're redoing all of finance, it's interesting to see that we've redone pre-seed and seed venture rounds via NFTs in this way.
Yeah. And speaking about, just quickly before we move on, the like legal defense stuff, there's actually been some conversations I've been following along briefly, because there's the whole like Coinbase was in court yesterday with the SEC, and there was some stuff about like collectibles, and they mentioned like beanie babies and stuff, and basically how a lot of the SEC's kind of desired rulings on a lot of this would go back and basically make any collectible security, and how ridiculous that was. And so, yeah, I think that's like such a strong kind of like moat that NFTs have as far as defensibility. And like the same thing with like NBA Top Shot when they were sued for being a security and stuff. It's a very, very hard precedent to overcome.
Yeah, definitely. As like a capital allocator, how do you look at the NFT ecosystem, both like on a macro scale, but then team by team basis of like which, potential teams or investments can I make that might have this type of framework applied to them, where I think there are some that are just clearly like, they're not going to mint another collection. They're not going to raise more funds. They're not going to drop a token. Like, how do you as a capital allocator look at, on a team by team basis?
Yeah, I think so. Like, we're still in really early innings of what this is, right? If you believe what I just said or you don't believe it, regardless, right? And if you think about NFT as like a framework for a type of financial asset, right? Then you must also think of it as like, well, there's a lot of different things you could build within that, right? So if you look at the landscape of startup venture capital, right? There are funds that specialize in healthcare tech. There are funds that specialize in CPG products. There's funds that the types of companies are very distinct. And I think a lot of people make the mistake of saying, oh, these are all just animal JPEGs, whatever. Well, they're animal JPEGs, but like really, if you look at what the companies are trying to do, it's actually quite different, right? And so the number one thing I look for is a team that like works well together and is dedicated, right? Number two thing I look for is, does the leadership of that team have a take on the space? Like, do they get what's going on here? And not get what's going on here and like, do they agree with me necessarily, but like, do they have a take? And I think you'd be surprised how many people don't have a strong take on what the future growth of this industry is. But one thing that I really, really look for is who gets it? Like, who gets what's going on here, right? And so from a capital allocation perspective, there are people who vehemently disagree with everything that I've just said, right? And that's fine. There's also people who like, I'm sure, I look at things and I'm like, this might make money, but I don't get it, right? Like, I don't get the thing that they think is happening. And so for me, it's like, I'm not trying to hit every big win, right? I think this is the number one mistake that people make trading crypto, trading NFTs is like, if you've hit every big win, you're taking too many swings at the bat, right? It means that you're like your hit percentage is more important than hitting every win. You should be very, very comfortable missing stuff. And like, I miss stuff all the time. We missed a ton of things on Bitcoin ordinals. Why? Because I looked at the teams building and their thesis didn't align with what I thought the industry was going towards. I was wrong in that like tons of people made a lot of money trading that, but I don't think I was wrong in that like it didn't fit the thing that I was looking for there. I wanted to find teams on Bitcoin that were building companies. And right now it felt to me like on Bitcoin ordinals, everyone was competing to try and be the next CryptoPunks, right? It's this really alluring thing. You don't have to do much. You just kind of design art and like get some vibes and go. Mm-hmm. And I think that's really hard to do. And it's not easy to pick a winner, right? But very much, I think like, yeah, someone's going to win that. Do I feel like I can figure out who it's going to be? No, not at all. Right. And so I don't want to make a bet there, but like someone will win and there will be a winning bet, but I'm totally okay missing that winning bet. Right. If I missed the winning bet of like the company building things on Bitcoin, that I would be upset about. Right. And so I think one of the big things is like being very zen about where you feel you're comfortable evaluating companies. And if you're not comfortable evaluating the company, like there's tons of opportunities, like look at where that is. And you're right. Like some people, like we don't trade a lot of art. Like we're really weird in NFT space fund manager. And like, we don't own Fidenzas. Like we don't have ringers. We don't like, we have some art here and there, but like, I would say it's less than maybe 3% of our portfolio is art. And so, people say, oh, do you not have an art thesis? No, I think NFTs is great for art. It makes a lot of sense to me. I think it's really tough to evaluate what art will do well for a financial perspective. I know what art I like as a collector, as a consumer, right? But as a fiduciary responsibility, like I don't feel that I am equipped in the right way to predict the art market, right? And I think that that is a very distinct and important thing, right? As a personal collector, like love to have tons of art, but like where do I think I can get good returns and know what's going on? For me, it's not the art market, right? And I think we're very weird in that many of the NFT funds out there really focus on the art thesis, but that's just not what we like. That's not where I feel we have an edge or where I feel that I understand the market to the nth degree.
Yeah, the NFT art market is almost this like very interesting case study in my mimetic desire. It's like, oh, we're just going to raise a bunch of money and buy the most expensive things.
Yeah.
And it's like, okay, well, everybody owns some squiggles and fidenzas and ringers and punks, and everyone owns the most expensive things that everyone owns. But is there an edge there?
Yeah.
Not like having the edge of like, oh, we can identify this sub 3 ETH project that could go to like 20 ETH. Like you're not going to get probably a fidenza to go from 50 to 500.
So there's one art project which we own a couple of. And the one art project we own a couple of, this is in our public wallets and stuff, is Rings. I don't know if, are you familiar with Rings?
I don't think I am.
You're familiar with Ringers.
Yes.
So are you familiar with with who Nick Cutter is?
Oh, yes,
Oh,
yes,
yeah.
yes, yes. Yeah, we actually hosted a space with him.
So Rings is actually So Rings comes first.
Yeah.
Rings comes before Ringers. And Dmitry Cherniak commented on the Rings post on Instagram.
Yes.
But you've probably only ever heard of Ringers.
I think I own 2 rings.
Yeah.
And I don't own any ringers anymore.
Yeah. So
But Dimitri probably doesn't listen to this.
that to me is like, I think a funny position to have. And I think that makes sense because if Rings is the things that wins over the art blocks, and this is no shade towards art blocks, like over Ringers, I think that is a funny and interesting outcome. And I think that is not the bet that most of the art funds have made. And that's why I want it to be the bet that we've made.
Yeah, because it's such a, you have like so much leverage on the field, kind of like
so
if everyone's
asymmetric.
buying this and we can get this for way cheaper, and there's a 1% outcome, smaller than that these
But
end up
there's
being
this
the
very
bigger
like
project.
historically, there's a truth to it.
Yeah.
Like it can't be whitewashed or shifted based off of sale prices. It's like, well, if you look at when this came out, it predates when this other thing came out. If you look at the artist's inspirations, this artist was clearly inspired by this other artist. It's on the chain in the sense that it was on Instagram and screenshots and whatnot.
But it's also like, you can tell like they look very similar, right? Like, but like this is the thing too, is like this is a type of thing that is so much more clear in crypto. Is like in traditional art world, you could kind of like this, that, the other, like this gloss. But like if you check the chain, this collection was deployed. Rings was deployed like way before Ringers, right? And so I think that's cool. Like this is where, to me, it being crypto art is more beneficial than it not being crypto art, is because like that will never be an ambiguous debate. Like there is a matter of fact that is easily verifiable of which came first.
Yeah.
I think this would be a good segue into the dick butts a little bit.
Yeah.
Because it's straddling, I think, the rings or like NFT art thesis and the team slash what I guess I don't even really know the state of the team now. But what can we just tell the story behind you becoming the biggest dick butt holders? Like
and so like I should say there's debate on what the biggest dick butt holder means. So right, like there's season 2, season 3. So we own a bunch of dick butts across different collections. There are people who own more of the like iconic season 3s than we do. We own a bunch of season 4s. What was the dick butt thing? And I should say dick butt is another fine art position of ours. They're very important. But like, so what happened there? So was the way that company was transitioned. That's really when it became very interesting to us. So like, we followed a lot of the narratives of like companies sort of flaming out. We'll probably talk about this later, but one of our big wins was Pudgy Penguins, right? Watching a transition, Rug to M&A was very interesting. We watched, I watched Sartoshi with MFers, right? Release a collection, then like make a big announcement that he's leaving, and the community took it over, and it was sort of this, there was bad blood in that transition, right? And so, but like MFers never felt like a project that was like a company, right? It was always mimetic, first and foremost. And I do believe mimetic things are very important in this space in a way that's like interesting. And you see, okay, so there's this landscape of mimetic things. I think of like Cryptodes, I think of Wrecked Guy, I think of Dick Butts, I think of MFers, right? I think like there's this ilk of like NFT project, and I think these tend to feel very crypto native, and tend to be this unique thing that like didn't exist in Web 2, right? And so I always wanted an exposure to that thesis, right? Like it makes sense to me that there will be winners in the mimetic game thesis. And I would even almost lump CryptoPunks into that, where I think like CryptoPunks are closer to Dick Butts or closer to Wrecked Guys than they are to like Bored Ape Yacht Club.
Oh, for sure.
In that like it's not about a team executing, it's about a vibe and a community, and like, and I think that like when I look at who are the holders of things, like who's going to drive this sort of culture, there's just a lot of interesting, quirky people, right? And I think first and foremost, crypto is counterculture. NFTs are also considered culture on crypto. So like, what is the counterculture within NFTs? Is like this cadre. And really what piqued our interest and my interest was the transition. So I'm not sure how much you guys followed this.
I actually don't know much about this.
Yeah, if we could just do like a ground level, like
Yeah,
tell
so
everybody what
there-
the whole thing was.
So the founder of dickbutts went by Daddy, was not very involved at all in the project. And during the bear market, he came out and said, we're going to do season 4 of dickbutts. And then afterwards, whoever owns the most points gets the contract, the Discord, like the Twitter, right? So basically owns the project. And there was a mint for season 4, and season 4 counted for like 1 point. Season 3 counted for like 2 points, and seasons 1 and 2 I think counted for like 5 points, right?
Okay.
But like, if you paid attention to this, it was like interesting, right? And this is a time the market's not doing so well. It's like not obvious that this mint's
Depths
out.
of the bear market.
Yeah, and so like, so there was this game that you had to play where you like, it was 3D. You had to like, it was a first-person shooter. You had to shoot verified check marks, and like the way you minted was you had to shoot baby SBF on the altar of a church, and that was the mint button. And it was this like crazy experience, right, to mint. And it
Baby
didn't,
SPF.
yeah, on an altar in a church. Well, this was your mint button, and I was like, this is
That
funny.
should
and
be every
mimetic.
project's mint button, to be
It
honest.
was it was truly like an incredible. I played through it the first time. I was like, oh my goodness, I can't.
Yeah.
I like sort of I can't believe they did this, but this is also cool. And like to me, this was very equivalent to like Satoshi deleting his Twitter account and then like posting an open edition and like taking $1 million on the way out. Like clearly, this is what was happening, right? Was like the founder of dickbutts was basically selling the collection, but in doing so, versus what happened with MFers, where like he's getting all the exit liquidity, was actually giving exit liquidity to other people, right? Because then it became this competition of like people trying to buy dickbutt assets, right? And so I think that he did it better, right? Like if you're gonna kind of like sell the project, like at least give your community exit liquidity on the way out, not just yourself, right? And so interestingly, like it wasn't minting out very fast. So like we went, and there was a couple of other people that did this, but we went and we minted like a large percentage of the season 4 dickbutts.
How many are in each season?
I think it's about, I should know this offhand. I don't remember. This is a little while ago. I think it's like,
It can also be rough estimates.
The early ones are like a few hundred, up
Yeah.
to 500.
season 1 and season 2 are a couple hundred. Season 3 is the one that you're thinking of that's most iconic, and I want to say that's like 3,000,
I thought it was like 3,000 or 3,500.
3,500, and then I think season 4 is like 8,000.
Okay.
And they were 0.069 ETH to mint, and so there was this math of like, okay, so like here's the comps, right? Like you have like Pudgy's was bought for 2.5 million, right? You have Oni Force was bought for like I think around 3 or 5, somewhere in that range. It was
That's crazy, by the way.
right? So like we've had these acquisitions in that price range, but if you mint out like if you minted out like half of season 4, you're basically guaranteed to get it, and it's only like a couple 100K. It's like 500K or 300K. So the question was like, what's the minimum of season 4 you can mint out to like guarantee you get it, right?
Yeah.
And then there was this whole very interesting thing that happened, which was okay, now the mint out. So ultimately it minted out, right? Like people are realizing this. There's game theory amongst the groups that are trying to like get this, right? And there then becomes this question of, okay, you have new people who saw this happening, basically like us, come in, right? We always had some dickbutts, but like we very significantly increased our dickbutt exposure into this, right? You have the existing community, which knows each other more, right? And so now there becomes a question of, can you align with other people and like combine points to have it, right? So it became very clear there was like us and one other group that like had enough points, and then the community had another pool of points. And so it's like 1, 2, 3 about equivalent. So any two groups that come together basically like get it, right? Or you could each try and buy on your own, but you risk the other. So it was like, and there's a lot of like what ends up happening that I can't super talk about, but like I think, and I think in like 2 or 3 years, this will be like a Harvard MBA case study, because it's the most interesting like social dynamic, but also like game theory dynamic takeover. And I just thought that like sometimes in the fun, sometimes in life, like, and sometimes in what we're doing, like we participate in things that I think move the industry forward and that I think are just incredibly interesting, right? And this was, I think there's a good economic outcome here. Like, and then on top of that, like, even if there isn't, this is so interesting. We need to be a part of it, because it may inform something later where we've seen this play out and been so involved that when this plays out the next time, we know how to play it better, right? And so I'm willing to take that risk. I think for me, as long as it's like, there's a world where we make some money here, I think there's not a world where we lose a ton. Like, this is actually asymmetric risk reward and like what we learn in the process, right? This is where also it's really useful for me to have investors that are interested in learning the industry, right? Because again, we don't have to operate. Obviously, we want to make good financial returns for our LPs, but like good outcomes include learning really interesting stuff and having this inside look. So when this comes up again, we just know more about how this went down than anybody else, right? Because we were in it, we were part of it. And so, one of those things too, and this is a big thing for me, is like, so far as I know, we're like the only fund that like got raised during the bear market. And so like we had dry powder and deploying over a period of time. We're now going into what looks like a better market. Like, we have a moat of like what we do in the industry where like, good luck trying to catch up. And like, you weren't there when thick butts happened. Like, you weren't there when all these things happened. And even if you were, a lot of funds weren't really deploying, right? So like, best of luck to you in raising and deploying a fund. I think it's great if there's other people doing it, but like, it feels like we're entering this with like more information, knowledge, et cetera. And over time, that lets us do better plays, right? And I think for me, like the best example of like that was Art Gobblers. If you were around when Sheeps and Dragons game was going on, or Wolf game and like Wizards and Dragons, it was just like a fork of those two things, right? Was Art Gobblers. And so it just played out the same way. It was like, there's this kind of like farming thing going on, and like everyone underestimates the token, compounds the token, and everyone underestimates the value of the token. So if you buy the night before the token starts accruing, then everyone like doesn't have enough token, and then they all buy it, and it's way more valuable. And then people do the math on the APRs if it were annualized it. But of course, that APR is ridiculous because it's going to go straight down at some point, right? And so like you just sell the morning after that token comes out, and like you've just made money, right? And like if you've watched that play out twice, when you watched Sheep's game and you watched Wizards and Dragons, like it was just, it's not rocket science to figure out how it's going to play out in Art Gobblers. But if you weren't around, because that was like pretty early 21 cycle, right? That was like, kind of
right. I was harvesting those dragons.
Yeah.
Like right after the gobblers.
Yeah.
It was like there's a few, I think there's like, there's Bamboozler's another one. There was like multiple things that came out that were like farm it and take the token, dump the thing you farmed it with within the first 2 days or 3 days.
Yeah,
and that was
good.
actually the
It's
way.
basically like an industrial game of chicken.
100%.
And it's better to just take a seat when it's good than like push for the returns.
But the thing is, like, they only work when there's enough period of time between the last time someone did it and like there's enough people in the industry that like don't remember how this works or don't know how this works.
Well, we'll have another one in 2024.
Oh, for
100%.
sure,
surely.
for sure.
Can't wait.
It will go to zero, and I will ape it.
I will buy it before the tokens come out. I will sell it as soon as they're farmable. I will make money.
Yeah,
and we'll see what happens. Going back to the dick butts and talking to like your partners and stuff. When you're gonna do something like make a big move like the dick butts, do you have like general sentiment on these monthly calls of like, hey, like, do you like go into the monthly call before you make a move? Do you already make the move and then go in the monthly call? Like, how does that go? Like when you're trying to explain to them, like, hey, I think we should put a big chunk into crypto dick butts, and then you have all these different, partners with their variety of expertise. Like, how do you handle just like educating them or like getting their vibe behind what move you're making?
Yeah. So, I mean, I think like, here's the thing, right? So first of all, like I'm very careful about not letting our LPs have information that could allow them to counter trade us, right?
Yes.
I think that no one should ever have that information,
For sure.
right? And so one of the it's Spencer Ventures, and I called it Spencer Ventures because I wanted there to be no question. Like you are like my investors are along for the ride that like I decide, right? Mm-hmm. And that's because I need to be nimble enough to just like ape dick butts if that's what I think is the right thing to do.
Because the market moves too fast to get everyone's permission.
Exactly. If
and
you're only meeting
align
once a month,
everyone.
that's
and like our docs are very clear. Like we have general ideas of what we're going to do, but like the thesis is make money, right? Mm-hmm. And that evolves over time. Like when I launched the fund, could I have predicted that one of our best trades would be like market making NFTs on Blur? Like no, right? Like, but like, okay, as soon as Blur launches, like, are we a couple of the top wallets? Definitely, because like it just made sense, right? And so like being able to be nimble is really, really important. And it's also really important, like what type of investors I take in. Like I've said no to investors. Couple of big criteria for me. One, this is a weird esoteric asset class. We are buying JPEGs on the internet. Like I will not take money that is like too meaningful to someone. Like if we have a lot of like institutional backers, accredited investors, but like, is this like your allocation into our fund should be like 1% at most of like your net worth, right? And
50% of my net worth going in there.
I mean, for me, it's like way more than that, right? So I'm actually like one of the largest investors in my own fund is me. It's like 90% of my net worth, but like no one else should that be the case.
Yeah, because for you, it's like bet on yourself.
you're the actor.
I'm
You're
the Spencer,
one.
right? Like
Yeah.
it's Spencer Ventures. Like it just makes sense. And so, but like, so there's that, but then it's also like, do you understand the risk profile? Like, do you really understand? And, you know, I think back, like, there was one investor that we said no to, because in the diligence process, you know, who's thinking about investing, real estate investor was like, so what is your target returns? Like, can you model your returns for us? And I was like, no, we trade JPEGs, sir.
Yeah.
And he was like, no, but like, I really need you to model our returns. I was like,
And then
I
it's
was
like, it's a bad fit.
I'm like, and I was like, no, like, so I sent him, I was like, here is like our historic quarterly returns. I cannot model future returns. I don't want to, right? And like, no, I really need you to. I was like, you know what? I don't think it's a good fit. And he was like, all right, you know what? Never mind. I like you. I'll put money. I was like, no, I don't think you understand. It's not a good fit.
Yeah.
Right. And it's because like I need, and this was things too, right? Like stuff happens in crypto that's crazy, right? Like you have exploits, you have, you know, USDC depegged, you have FTX. One of the craziest things that happened, right? So we launched our fund like maybe a month or two before FTX collapsed, right? And we deployed some capital. We were up like maybe 600K. Like we deployed like a good amount of capital. We were up a bunch, right? And we lost like $1 million in a day, right? And we're a small fund. Like that's a very meaningful percent, right? Like we're, you know, the first pool of capital we raised was like 4.5 million, like a little bit over that, right? So like $1 million in a day. And I mean, good news is a lot of it was just giving back profits, but like we lost a lot, right? And that was a moment where I was like, it's not our monthly cadence, but here's a call. We lost $1 million yesterday. I think this is the generational cycle, like defining buying opportunity. And we deployed the rest of the fund in like 2 months after that. And I was like, we lost a bunch. Crypto looks really, really bad. I can't imagine how it could look any worse. And that's why we should buy things. Right. And the thing that was like, and that was, you know, you're a new fund manager, you're 2 months in, like you have this, I mean, that was a stressful moment for me.
Oh, I can't imagine it.
No idea how that call was going to go. I was ready to field like, and I knew I had really good investors. I knew I had chosen the right people because they were like, okay, that makes sense to us. Like that's the bet we backed you to make. Same with when Silicon Valley Bank collapsed, like $1 became worth less than $1.
Did you play that as the fund? Can you say?
So we did a little bit. The challenge with playing that was like, it was actually hard to play, right? So
It was on a weekend.
well, it was on a weekend. We had money, like, so, okay. We had the way that we played it mostly was we swapped some of our USDC to Tether at a loss and then LP'd USDC to Tether stablecoin pool. And then the fees basically returned the loss. So we were able to go over to, and then when USDC started to repeg, we ended up back in Tether. And so throughout all of that, we basically broke even.
It was a crazy stressful.
The thing was you couldn't really buy it with Coinbase balance. That was the issue because you couldn't like most of withdrawals from Coinbase have everything to do with like US dollars to Circle to like withdrawing USDC, and that stopped working. And you could still, but like we were actually just buying ETH when that happened with the US dollars versus buying stable coins because it was like, I think the mistake everyone made was not wanting to swap their stable coins to ETH because they were like, oh, the stable coin's worth less than $1. I should buy the stable coin. But really, ETH went down like dramatically in that period of time. And so ETH kind of depegged its like proper value as well. So like, unless you just were sitting in Tether and could buy USDC, or like, I know people who were like leverage trading on like perps for it. Like that was the other way to like degen do it. You know, but like, the truth is, like, we had so much exposure, like if USDC didn't repeg, right? This is very bad. This is like systematic risk for crypto, right? So like we have tons of exposure anyway to it not repegging, And then if it repegs, like I think, ETH sold off, it probably goes back. Like we have so much exposure to it repegging anyway. It didn't feel that meaningful to do too much else, but it was certainly like a whiplashy moment. And there was some, like, one of the things, I was a big, like, I preferred USDC to Tether at that time. I think I still do in general, but it was a big aha moment of actually we should have had multiple different stable coins, because when any one stable coin, like I was holding USDC to buy a Tether depeg because I'm a big believer of like just buy Tether depegs, but like I realized I should actually have been holding both Tether and USDC to buy the other depeg, right? Because it's effectively a hedge. Like if one depegs against the other, you buy it and you basically just have the same amount of money. But really, like the other thing too was this is like a very subtle thing. We had a Coinbase balance that was in USDC, and I've now switched to holding Coinbase balance in just Coinbase balance. Because the other thing that happened too was our Coinbase balance felt safer than our bank account at that time, right? We have TradFi rails, like we have access to the Fed funds, right? We have all that stuff, and like the bank account felt scarier than the Coinbase balance, which wasn't in USDC. So like the dollars on Coinbase not in crypto felt safer than the bank account. That was like one of the interesting moments.
That was a super fucking scary weekend. We've talked about it a few times this week, but I want to go back to kind of the early days of the fund. And you said you within 2 months of the FTX crash, were deploying everything. That around the time, like you went hard into pudgies.
Yeah.
And what other things were you looking at that time? Because the marketplace was pretty grim and there weren't that many optimists. So I was curious what stuck out to you about what you were able to invest in back then.
Well, so like really the trade was, the crazy trade was like buying ETH at like $1,100 to $1,200 and then bidding pudgies on Blur. That was like the trade, right? That was
farming
the points on Blur in the first airdrop, right? So
were you farming points on like every collection, or were you just exclusively, I mean, like not exclusively, but very, very heavily weighted towards just the pudgy market?
So we were farming points on a lot of collections. We were farming like 8 points and other things. But like when I think about like the mindset then, it wasn't just farming. It was like, I want to enter a large position in a collection. What's the right way to do it? And like, hey, obviously now, right, we look back on that period of time and like farming Blur at that time was just the craziest trade, but like it wasn't obvious then that was the case, right? And so it was like, okay, but like I could just go buy, but like the way to buy that's correct is to also get these Blur points, right? That was more the mindset of like, let's do it this way. It wasn't like the pudgies was more the thing, but like, I think to me, what's very clear is like, some of the big winners in the space are going to be projects, but some of them are also going to be like infrastructure. And so we're big liquidity providers to a lot of different infrastructure for two reasons. One is because I think you get really good outcomes backing infrastructure, but two is because like having good infrastructure makes the rest of what we're investing in like do better because it's more interesting, right? And I think there's a lot to talk about like how different the market is today than it was like in terms of what you have access to as like infrastructure and like ability to do different types of trades than it was, last cycle. We can talk about that later, but like, we were buying a lot of pudgies. We bought a couple punks. We were bidding on like, we were watching, I don't know if you guys remember this, but Deepak from Chain, like he lost a lot of money in FTX and was just fire selling his NFTs. We bought a lot of the fire sold NFTs. It was like, there was a couple of stuff that we bought that was just like, we want generally NFT exposure. So we bought some Azuki, we bought some like mutant apes, we bought some, we bought a bunch of different stuff. We bought some Clone X, right? We bought some Moonbirds too. Like we bought a lot of
basket of like,
bought a basket. I would say like we definitely went way overweight pudgies relative to others. We were like the three heavily weighted ones were pudgies, mutant apes, and Azuki. That was the three that like we really went and like got a bunch of. And it was, part of it was like, I think like there's sort of two phases, right? Of like how to buy something. One is like, I want to buy this thing, right? Like I want pudgy exposure. I'd met Luca, gotten consensus, liked that team. Like there was a lot to like, right? Cool. Secondly, timing. Okay. When to buy. The luxury of the bear market is like, you don't need to like rush into buying something, right? And so I think one of the things that we had seen was Pudgy Penguins has actually the largest DeFi user base of any. So if you look in wallets, the number of wallets that use Curve and Aave and also hold a PFP, Pudgy Penguins is like 2 to 3x any other collection, which is a weird and interesting stat. And what did that mean? Well, that meant that probably those people had disproportionate exposure to the FTX incident, right? Because DeFi people got liquidated on leverage trading, got liquidated on their pools or whatever, got blown up. Like the chance of that person like that, right? So when you saw the first day FTX collapsed, Pudgies went from 3 ETH to 2 ETH. Other collections were down maybe like 10%, but this was like a 30%. Right?
Interesting, yeah.
And so it was like, okay. And like one of the interesting things in the job that I do is how do you build a meaningful size position, right? So it's generally like a very difficult thing. Like if we're
Can't just go in and be like, I want 200 Pudgies.
yeah, right. So like if you want to go buy 100 Pudgies, like you can go market buy them. A lot of people do, but like usually this is a position that takes time to enter, right? However, if you're having an event like this and people are capitulating, like, okay, you can buy out the capitulating people because like they're capitulating not because of the project, but because of something else, right? And so like the ratio of the different projects was like that we were looking to buy, like Pudgies just became the cheapest. And also there was this opportunity because so many people were dumping big positions to like accumulate a meaningful size position for the fund. It was like, oh, this is kind of a no brainer, right? Like let's do this. And then it's also like, you look at and so that was part of it. It was like, we had a couple of projects we were looking at buying into, and it was like, this was the one that felt the most the right time to do it. And then there was also just this opportunity to like, I like owning 1 to 3% of a collection. Like this is one of the interesting trade-offs of managing more capital, managing external capital is it's harder to trade, right? Like when you're managing, a P&L personally of like, 5 figures, 6 figures, like you can get one Pudgy and this is very meaningful, right?
Yes.
And you're not market impactful entering or exiting that position. When you're managing 7 figures, 8 figures, all right, that one Pudgy, even if it goes up 20 ETH, like 20 ETH isn't that much in the scope of like 5 million, 10 million, right? Like, and it's just a weird mindset to change. It's a very different exercise trading big capital, and it's a lot harder, right?
Oh, it's way harder. I've had people ask me about fun stuff, and I'm like, I can't even trade my own shit. Like, it's hard enough to position. I'm like, I don't want to have those problems because trying to decide, hey, we want 100 plus of these, and then getting them, it like, luckily you had the event, but in a flat market where it's just boring, like that could take over a month, if not longer, because like there's some times where there aren't that many capitulations into bids. It's like a bunch of green, not a bunch of red. How did the like, were you super active every day farming everything and just managing your positions with like ETH and Blur, or were you much more like, okay, we're gonna like set it? Because I didn't farm Blur enough. Like I didn't realize how big it would be. I just took what I got, but I can only imagine like if I wasn't an idiot. But looking back, like I'm curious, were you just like every day, just like 8+ hours a day fucking around with Blur, making sure like you're getting points, like you're being max efficient? Or are you more like, we want 100 Pudgies, they're 2 ETH, I see the floor bid is 1.95, I'm just going to set a floor bid for like 1.97 or 2 for that amount and let it go? Or was it much more like a hands-on manicured position?
So I'll say this is like, and obviously, hindsight's 2020, right? Like, we were incredibly hands-on the first like 2 weeks.
Okay.
And this is a thing that we'll often do is like the points in the first few weeks were way, way, way better than in the subsequent weeks.
Less competition. You're getting
people just didn't get it, like how big this was going to be. And it like I'd farmed looks rare. Like again, like
you'd seen it.
I'd seen this happen. It's not like, okay, if you'd asked me, would this flip OpenSea? I thought you're crazy at the time, right? But like, could it at least have a looks rare sized outcome? Like, certainly, right? And so, it was shocking to me, like, in the early days of the Blur farming, like, we were multiple of the top 10 wallets, and we had done that because it's actually like the points are like super PvP, right? And so like having multiple top wallets, like it was always interesting to me in the last farming cycle that Hanwei who is like the top farmer, only had one Hanwei wallet and concentrated points there, which is like really not actually the optimal play, right? Like you want to be all 10 of the top ones to prevent other people from getting the 2.5 multiplier, right? Even more so than you wanting the 2.5 multiplier for yourself.
Gotcha.
And so like we farmed a lot of points in the first like 2 weeks, and regrettably then like weren't as aggressive about it afterwards. Obviously in hindsight, had we just spent like, I don't even know, I'd still need to be managing a fund. Like I could just be on an island somewhere, right?
Was,
But like,
did you do the same for season 2? And then did you get involved at all with blend loans on Pudgies to accumulate more?
we farmed almost nothing in season 2. Season 2 was, I think, whereas people were way underestimating Blur in the beginning, people were just doing the math wrong on the expected value of their points in season 2, and 8 huge losses. Like it became too attractive and knowledgeable to just dump on farmers' heads. And so like,
shout out OSF Amanda.
yeah, OSF Amanda played it right. I mean, like we took those moments, we were more focused on like what positions can we rotate based on liquidity in the market now versus like what positions are like how can we farm this? And it became a lot more automated and a lot more PvP automation. And like, we've actually increased our internal like automation team since then, but like, do I want to be PvP against other players? And quite frankly, like when Machi Big Brother came in, right, like he was doing stuff that was like his optimization principle, I don't think was just like, how do I make the most money off of this? It was also, how do I make the most influence, right?
Yeah.
He became like a main character in NFTs for like actually relatively cheap, right? Everyone makes fun of Machi for how much he's lost. But like there was a time when people would like buy gold apes for like several million. Like people would buy like, alien punks for several million to become the main character in NFTs. And Machi did it. Like if you think of that as just like a marketing cost for Machi becoming super market relevant, like it's actually like not that expensive, right? What he did. But when you have someone who's in the market doing market actions for clout and influence more so than for profit, like it's hard to PvP against someone like that because
They don't really give a shit.
they don't give a shit. Like, they're going to
money.
drive unprofitable. And so like you can't compete against people who are not like playing the game. And so like I think a lot of people lost a lot of money trying to compete with Machi on a game where their outcome was purely financial and his outcome he didn't really care, right? And so like that was the big mistake that a lot of people made that time. What we did do is we bought a bunch of Blur, like the token after the like around the blast stuff, and have staked a lot of that. And that feels very good right now. I think.
Yeah. Oh yeah. That's
Yeah, because
like-
you're earning blast. You're up probably what, like 3x on the token, 4x.
Yeah, I mean, it depends. Like we
Depends on when you bought
entered
and
over
entered,
time. Like
yeah.
we even bought some more at like 50 cents, so it's
Yeah.
only up a little bit. But like even if that goes down, that feels like just it feels really really good to be in that position. And we
feels
bridged.
like a overall bet too on the NFT market. Like Blur isn't going anywhere. You use it, and I'm sure it's like, well, I've never used anything that feels as good as Blur in terms of just trading in and out and managing a portfolio.
Yeah, I mean, like look, like it's good as a product, but like really what it is like it is everything that Pac-Man has done with Blur. Like love him or hate him, like he just outcompeted the competition, and it wasn't even close.
Yeah.
It was like he showed up and just, like knocked out a legacy incumbent, like as though it were nothing. And
Within a year.
and like if you look to like what they're doing with Blast is incredibly controversial, right? But like
It's working.
I couldn't in my head construct a way like that Blur token. I thought we were gonna buy it like 15 20 cents and it might go to like 25 cents, right? Like how was he going to save the price of this token after such a large airdrop? And he did it, right? Like it's like, again, people, but like, if you look at certain people operating in the space that just like get what's going on and like understand the thing and like being able to bridge to an L2 to earn the yield, like the thing that I think Pac-Man identified that was just so simple and elegant is like, there's a lot of people with a lot of ETH that are looking for anything that is slightly better than Lido yield, right? So like everyone with a lot of ETH, right? You can either stake it or like at Lido yield, you get your 3 to like 5%, right? But like if you give someone exactly Lido yield plus points on top of it, like it's such a no-brainer to do it that, and like if you back solve how you get a good L2, it's with like high TVL, right? And like what is one of the two most profitable things to do in crypto are L2s and L1s, right? And so like even if you back solve this, like knock out a legacy incumbent to launch an L2, like I'm not even convinced that like the NFT market is that important to that overall plan, right?
No, I don't think it is.
And
It's just extra.
although like if you want to have a good thriving L2 or L1, and I think this is like outside this conversation, a very important thing, right? Is like one of the things that has been really key to me of talking to builders at like Polygon, at Solana, but like say all these different places is like one thing that was very clear from the last cycle. So if you're an L1 or an L2, right? And this is what a lot of crypto is, and a lot of market cap is concentrated in these things, and they have a lot of cash and available resources, right? You're in the business of generating a couple of things: transaction volume, number of wallets created, fees paid, and like gas fees, right? This is your business. You are doing those three things, like TVL on your chain. Those 4 things, right? The market cap of things that exist on your chain external to the chain itself. Like these are the 5 potential things, right? That like really matter to you in terms of a KPI. And NFTs do all of those pretty well, right? Like they onboard new users. If you look at like Ethereum's run in the last cycle, like it had DeFi and NFTs, right? And one thing that I spoke with, I was speaking with some of the team at Polygon. They're like, look, DeFi, very easy to get, right? You want DeFi, if you throw enough money at it, give the protocols TVL, like you have DeFi, right? NFTs, you can't just like throw money at and get, right? Like when you try and throw money at it, like it's culture, and culture is like hard to buy in the same way, right? And so, where I think like is very interesting about the Blast play as it pertains to NFTs, if like a lot of the other L2s are having this trouble of attracting interesting NFT ecosystems, right? I think you see Solana as like, I'm lumping together L1s and L2s, but like, I think these are actually similar like ecosystem problems. Like if you have an ecosystem, having stuff to do in the ecosystem, right? I'm going to bring this full circle to the beginning of the pod, but I'm like, this is why NFTs make sense to me, is like everything that's big in crypto is ecosystems. But like the thing that is actually people like doing stuff and building companies is NFTs. So your ecosystem needs someone doing stuff in your ecosystem. So you really want NFTs in your ecosystem, but like, how do you create that? And this is where I think like the bull case on Blast is that, I mean, are you going to go to the chain that's created by the person who runs the largest NFT marketplace to launch your NFT? Like, doesn't sound like a bad idea, right? Like and so I think one of the big things will be like, I expect there to be one of the more robust NFT ecosystems will be on Blast.
Mm-hmm.
I definitely mid-curved the Blast play and mid-curved the Blur play after hearing you talk about it.
I still think people are underestimating how big Blast is going to be. I doubt you are, but I like put out a poll on Twitter the other day, and I was like, what do you think the fully diluted value of Blast will be like a week after it launches? And the winning vote was like less than $2.5 billion.
No
and I was like, that is insane.
No,
like you can look at Arbitrum Optimism, look at like way shittier chains, and it's double that, triple that, way more than that. I think it's going to be
at least 5.
I think it's going to really surprise people.
Yeah. Well, it's also, I mean, but there's risks, right? Like there's risks that there's a one-way bridge, like Paradigm didn't like there's risks in this, right?
Oh,
like, but yeah, it does seem like, and here's the thing too, is like, if you look like at the ETH beta plays, it lags. Like I think Blur token is really good ETH beta right now. So like when Ethereum ETF narrative caught, ETH rips, right? Then you have Arbitrum Optimism, Polygon rip, Blur ripped a day later. Like this is really like very interesting to see. It's a lagging like ETH beta.
Yeah, it feels just like a stronger token too. The weird thing for us, Andy and I are both angels and Blur. It's like just came out of nowhere for us. We just
I had no idea.
We saw the announcement the day it came out, and we're like, whoa, like that changes the game. Like didn't know about that at all.
They were really good about not leaking that.
Yeah, we didn't. I didn't even hear like rumors of it. But yeah. Anyway, going a little bit back to the Pudgies, I want to know about the 3AC liquidation event and like how you were able to get some, like how that played out. Because I think for the people on the outside, it was just kind of like an under the radar thing. They kind of like tweeted about it maybe like once or twice, but I don't remember it being like outside of the auctions they did. But I'm talking about the placement of things outside of those like big auctions. Like how did that go?
Yeah. So we did a private deal with Sotheby's. And so unfortunately, there's a lot of the private side of that I would get in trouble for talking about.
Gotcha.
But, I think the team at Sotheby's was really great to work with. And, I think one of the things that was interesting is like their team has a strong focus on fine art, right? Especially on generative art. And I think you see a lot of the auction houses, like generative art makes sense to them. Yes. And I get it. Like it makes sense why it makes sense to them, right? And so you see something like Pudgy Penguins in the 3AC portfolio. And, Pudgy Penguins are fine art, don't get me wrong, but like it felt different than a lot of the other generative art. Like this is a project that represents a company that's like building a thing, right? Versus like a generative art that you collect for aesthetic appeal, et cetera. And so, I think that was a lot of the opportunity there was like, it was just this, I remember there's a thing that I think about. One of my favorite things to do is go to antique stores, right? And you walk into an antique store and you see someone's got like binders full of like old coins, right? And you look and you're okay, they're probably priced correctly, right? And they're probably like maybe even hot. Like this person really like you're not going to get an interesting deal here, right? You walk into a store that's all like crocheted kittens around and you open a drawer and there's a couple of old coins. This is the more interesting find, right? And so to me, that's kind of like what this was like in this portfolio, right? Like what is the thing that is the more interesting thing to look at? And it's the thing that doesn't fit with the rest of it, right? And not that it doesn't fit, but it's just the thing that's distinct. And then, I think it was a long process of negotiation, talking, but at the end of the day, I think it was a great outcome for everyone, right? So one of the things too is like Pudgy Penguins has a very distributed holder base. There's not a lot of people that hold like a meaningful number of penguins. And one of the things that's challenging for a lot of projects, I think, is in this like market, right? You have this challenge that most PFP projects have, which is that like the team and leadership was the team and leadership when the project went down 95% in price. Some due to faults of their own, but a lot of times it was just kind of that's what happened in the market.
The market
right?
dynamics.
And so as they come back, people feel burned. It's just the vibes are not good in the community. And like, it's really hard to have these big comebacks for a lot of projects. Why? Because like, people are looking for their exit. You have these large holders that feel burned. They don't like, they don't look at their NFTs and go, oh, I'm so happy. This is the reminder of the time I lost 95%. Right. And Pudgy Penguins was distinct in that like, because it was acquired during the bear market, the holder base, like has been, this has been this resurrection story, right? They were at all-time highs going into the spot Bitcoin ETF, right? Like this is really interesting, different dynamic. And then you have this play out too, where it's like, okay, partially because of that and partially for other reasons, like there aren't that many very concentrated holders. So like if you were to go and buy a large position in Pudgy Penguins, like how could you do it, right? And so we've gone around and like asked all the other big holders, like tried to buy them out, right? And like this is something we do very often. It's like, okay, we go and we bought out a bunch of them, right? Like whoever wanted to sell a bunch sold it to us. And then it's like, okay, if you are a new person who's like, I totally miss Pudgy Penguins, I need my exposure to Pudgy Penguins, like how do I get that? Well, here's how it really goes down, right? Is like, where is there available pools of Pudgies, right? And to our understanding, the only available pool of Pudgies that you could go and buy that was large was at that time the 3AC Pudgies, which was the number.
How many did they have?
They had 48 Pudgies, 48 littles. So the Pudgies had unclaimed littles, and they had 48 rods as well.
Okay.
But this was, I think, the number 5 largest wallet holding Pudgies was the 3AC.
And they also had like some meaningful not floors.
Yes, yeah. So they've got an ice crown. They have a couple of crowns. There was no gold skins or ice skins, but they had some just aesthetically nice ones.
Yeah.
And so, after we acquired that, it was like, okay, if you want a big Pudgy position, you have to go market buy it, right? And what does that cause? Well, that's how price moves, is when the big buyer that comes in doesn't buy out another existing big holder, but has to market buy it, right? And so this was part of a longer quest of ours to buy out everyone who could be bought out, because we believed when the market came back, there would be new entrants or old entrants that felt they needed a big Pudgy position. And like, that's how the market moves. And I think you've seen that in the last couple of weeks. It's like people go like, we saw someone dump like a bunch of autoglyphs and fidenzas.
They sold like 3 fidenza, an autoglyph, like more art blocks.
Yeah.
And then they just,
they're up like, what, 300 ETH, something like that?
they're up like 2x.
Right. But like, so this was important. Like that person doing that, and then they just swept, right? And so like that person sweeping is so much more advantageous to like the growth of the ecosystem than that person going and buying out another large holder, right? And so, and we saw there's a couple of wallets of just funded ETH like from an exchange and just bought $1 million of like this is what's happening. And like if you remember the last market, like this is how people enter the space, right? this is how people with like true fuck you money like come into the space is they put $1 million in a wallet and they buy the thing they want, right?
They fucking send it.
Yeah.
And like you need to set up a scenario where like that's the right thing for them to do because there is no other way to buy big chunks of pudgies.
So when you're buying pudgies, you're operating with this project model that we talked about earlier in the pod. Did you ever think like the dim airdrop would be something that pudgies would get? Like when you were looking at, there's a bunch of them using Curve, there's a bunch of them using Aave when you're looking at the stats of the average pudgy user. Like, did that factor into any of the thesis?
100%. Yeah. I mean, like, okay, two things. One is like, if you remember, like if you held the Bored Ape in the last cycle, right? Like you remember that like a lot of the value of the Bored Ape was other random stuff you got because people were courting your community, right? And like people court communities that have good builders, that have, it's a giffen good, that have high floor prices, right? So like the big benefit of owning the winner is not just the winner itself, but like everything else that you get associated to it. You got Adidas, you got Prada, you got like all these things last cycle from owning an ape, right?
Hat.
Yeah, you got the hat from Bape, right? Like there's all these things, right? But like when as it pertains to the dim airdrop, like, I think the airdrop that feels most obvious, and who knows if you're gonna get it or not, but I would be surprised if you didn't, is like little pudgies. If you bridge them via layer 0, right? Like that whole team, all the layer 0's developers have wizard pudgies, specifically wizard hat pudgies, right? Like, but like, I'm not saying that's gonna happen, right? It's just like, if you do the math, it's like P times that happening, expected value is like quite high, right? And, I think it's great to see. It's also like, did the team behind the scenes like hustle to make that happen? I don't know, right? But like, this is also why I like Luca. Is like, one of the interesting things about NFTs is most of the large projects at the beginning of the last cycle, you had a choice: be a trader, be a builder, right? And a lot of the big project founders, some people do both, but like a lot of the big project founders like were a builder, right? And they've never traded this market, right? Luca is actually a pretty good, one of the better NFT traders, like prior to buying Pudgy Penguins, right? And so like, it's really interesting to see he's one of the first large project founders that prior to being a large project founder was a trader, because that like couldn't have happened before because there was no time before the launch of the other projects, right? And so like, it doesn't shock me too that like, who's the team that's more plugged into the actual like DeFi ecosystem, et cetera, is like that team. And again, yeah, like this is the thesis too, is like, you also have to think like a lot of people who use Curve, who uses other things, are more crypto native. Like some of them probably have bigger bags than you'd think. And like, to whom is this allocation? We talked in the beginning about like me buying foil, alpha, beta, whatever. Like Magic cards is nice because I don't have to think about the money. It's just I like collecting them. Like that's the holder base you want, because that's the holder base that will like be like, oh, cool, it's up 20 ETH. Not like, oh my goodness, this is 100% of my portfolio. I'm going to sell. Like,
yeah, they're not refreshing Blur every day to check the floor price.
Sell to pay off their credit card loans, right? Like, and which is, if you've done that, like great, and it's not like it's not bad to have people like that in the ecosystem, but like you need a healthy balance, right? Because and I think this was oftentimes like one of the challenges on Solana was like a lot of people on Solana, like you just look, the average hold time is so much lower than on ETH because it is people flipping, grinding up. Anyway, it's just a different culture there. And so it's harder to operate like at these bigger scale things because things just move quicker.
Have you taken positions on Solana NFTs through the fund?
So our like, currently our only Solana, is that true? Our largest Solana position, I'll say, I think it's our only, but our largest Solana position is Bodago's.
Okay.
That was like this thesis too of builders of like, I think one thing that I'm very big on is top of funnel, right? And so I think we go to Pudgy's, like they have 13 billion Giphy views, like that's top of funnel, right? No question. They're in Walmart and like, just top of funnel, right? And then you look at like Nifty Portal team, their newsletter has huge subscription amounts. Their podcast is well produced. Like, when people come in, this whole bet at a macro level, like I think to be invested in NFTs, like you have to believe that there will be an influx of people to crypto and influx of people to NFTs, right?
Yes.
If you don't believe that, just don't be in this space, right? And so like when that happens, how does that work? Who is top of funnel for them, right? And so to me, it was like, okay, I want to make a bet on Solana. I think there's various plays, but like what feels well priced where we could get a big position that like, the team is going to continue to build, is going to continue to have capital, right? Like they had sponsored spots on their shows, which they're not going to go out of business, right? Like during the bear market, it doesn't matter how long the bear market works, like they exist, right? And so that's more than you can say for a lot of projects. And I think like top of funnel that I also do like the art a lot on that project. I think it was clean. They got the line art right. You know, we see even like dog coins doing super well on Solana right now. Like
with hat.
You know,
I got
with
a lot
or without
of
hat.
Bodoggos with hat.
Yeah. So, you know, like, do they do a dog coin? I don't know. Right. Like there's just like these options for that. So that's our Solana exposure. I feel very comfortable with it.
I feel very comfortable with my dogs. I got them for like 1 to 2 SOL in November when people. It's always a good thing when I see someone who bought something for 12 and they're selling it to me for 1. I'm like, yeah, like that's a pretty good bet on my end if this isn't going to 0, which with them I never thought it was. Because I've been surprised. I have a couple of Tensorians. Andy does too. Like they get a fair amount of airdrops and love.
I
Mad
got
Labs.
some dim airdrop for my Tensorians.
Yeah, I was like, oh, I got as much like the Pudgy and the Tensorian got me more dim than all the Celestia I have staked, and I was like, that's
same.
That's notable.
Yeah.
Like,
that's for me at this point in my life, it's like the NFTs I can just like buy and stake, and I'm like kind of a similar thing where it's like with the Tensorians, it's like I have talked to that team. They are building good things. Their exchange is the best exchange. I am more than happy to just like buy a good chunk of these, stake them, and kind of forget about them for a year or two and see what happens.
farm some points.
Yeah, give me the points. I love points. I'm a slut for points.
There's just too many points. Do you feel like it doesn't sound like you're farming much any points anymore? Is that?
Oh, quite contrary.
No,
I think there's not enough points.
Oh yeah.
I am a points hungry person.
So what are your favorite points to farm right now?
I think one of the underrated points to farm right now is Wasabi.
Okay.
If you've looked at this,
The NFT perps? Or?
they're doing perps. They started as covered options. They're doing covered perps, which is like a kind of an interesting thing. And they're doing like something like $250,000 to $500,000 in volume a day, which is like pretty good for a perps marketplace. They launched that like 2 weeks ago. But that one's pretty good.
And what chain is that on?
It's on ETH.
Okay.
I mean, I think the obvious one is just like Blast, like bridged ETH to Blast. Like that one's good. I'm trying to think of some other points that blur points are really good, I think, this season.
Yeah, I staked my airdrop and our allocations every time I get them right in there.
Yeah, so there's stuff like that. You know, I think there's a lot of stuff going on in Solana. I think I feel underexposed to the stuff going on in Solana. So I think there's a lot of good. I've heard a lot of different like things coming out there. You know, I don't know. There's just stuff. There's stuff happening, right? It seems interesting. It's not quite points, but I think the Flooring Lab stuff is really interesting too.
Yeah.
What's going on there is just cool.
Someone can unlock the fractional liquidity.
Yeah, it's interesting. Like it was tried with NFTX forever ago.
Yeah.
But I think they have a lot of like it's tough. I feel like with that type of project, I can never tell when it's like the floor pool liquidity thing. Is it the team that didn't execute well, or is it the idea has some fundamental challenges? I think what Flooring did though with like the safe boxes or whatever they call it, where you can like borrow floor points, like floor against your NFT. I've always really liked that idea. I think that's smart.
Yeah, I mean, like, look, call a spade, right? Like, the reason that Flooring Labs has worked when a lot of people didn't was because they seeded it with like $40 million of liquidity, right? This was the problem with NFTX was like there are like I think there's still fractional pudgies on NFTX that like the fraction token depegged from the because you couldn't get a full token because there's like one pudgy in it,
Yeah.
right? And so like they solved the cold start problem in a way
By
that
just having
like,
a lot of money.
Just by
having a
piling
lot
bunch
of money,
it.
right? And like, you know, that's an interesting thing that happened, right?
Yeah, and because then it totally changes the dynamic as well, where it's like, all right, if they were willing to solve the cold start problem with $40 million, like I'm pretty confident that they're going to keep trying on this thing. They're not going to give up after a year and be like, I don't know, it didn't work out.
Fucked it up.
There goes our 40 mil.
Yeah, yeah. And if you look too, like there's a couple of people that like are technically just like do more interesting and like I don't know if you guys paid attention to what they did with the incentivization for the different pools, but like they switched. So originally when it launched, you had incentivized LP. So like when you use Flooring Labs, you're literally using Uniswap's contract, right? For LP pools of the tokens. They originally incentivized ETH to micro token pools, right? Very recently what they did is they swapped that to incentivizing micro token to FLC pool and then FLC to ETH. So if you sell like a pudgy penguin into the bid on Flooring Labs, it goes through FLC, right? And to ETH. And so you have this like meta liquidity pool, but then also you have the token that just gets all this volume like thrown through it, right? Because of having to go through it every time you buy or sell with ETH NFTs. And so like in terms of just designing tokenomics, like that is one of the coolest things I've ever seen done in crypto, was like that transition of liquidity pools. And then like speaking of Wasabi, like Wasabi is built on top of the micro tokens. So you're actually trading perpetual swaps on like the micro tokens on
Oh, that's cool. I
Flooring
didn't know
Labs.
that.
And that's why they can have covered like leverage versus like perpetuals versus most of the other perpetuals, which are synthetic and are using a funding rate to depeg or repeg it. Because one of the big challenges with like launching perpetual swaps is like traditionally with NFTs, to have a covered perpetual, you would need to do unit of one NFT, which like if you're longing or shorting a Bored Ape is like a lot of money, right? But the micro tokens enabled them to have two things. One is a liquidity pool that is based on like units of 1/1,000,000th in terms of motion. Whereas like, this is one of the challenges, right? Is like to have perps, like NFT price movement is very stepwise, right? It could be one NFT sells and the floor goes from like 18 ETH to 18.5 ETH, right? This is a big jump for like one sale.
Yeah.
Right. And so
It could like liquidate an entire position just from one sale.
no, exactly. But like having liquidity pool, like Uniswap pools that exist allows you to not have exactly this problem, right? Because you can do smaller movements, and then also you can borrow all this stuff, because like perps on tokens that exist in liquidity pools on Uniswap is like a solved thing. This is a thing that like exists. We have GMX, like this is a very large market. And so being able to plug into all that infrastructure, I think like when we talked earlier and I said like this time around is very different because we have these financial instruments. Like we did not have the ability, I think, really to short last cycle at all.
The way to hedge our position.
No way to hedge your position. And there's now a couple of different protocols. You've got NFT perp that's like, launching back out. You've got this. There's a couple of these different like perpetual swap things. You have options. It's not like fully there yet. Like it has room to go, but like it exists. And you also have the ability, right? Like last cycle, if you wanted to get Pudgy Pang, like this is the thing that happened, right? Pudgies recently went to like 18 ETH. Little Pudgies went to 2 ETH. That prices a lot of people out of Pudgy ecosystem. Last cycle, you would just have to buy like the derivative, right? What's the Pudgy beta play that's like 0.1 ETH, right?
Sappy sales.
Yeah. But like you can now buy like 0.1 ETH of a Pudgy Penguin the big, which is like, that wasn't really accessible last cycle.
Yeah, and when we tried it, we didn't have the liquidity backing, so it was hoping that.
Come on, you guys didn't have $40 million. What's wrong with you?
That's what the raise should have been. We should have just raised some money
Yeah.
and then put it in the liquidity pool. But
Next
no,
time.
it was one of those where you're relying on the vaulter to come in, seed the liquidity pool. They might not have the best intentions. It's like, can't verify it. They might sell some, pull the liquidity, and then you're left with like unhappy people. And yeah, so I'm definitely, I need to use Wasabi now that I didn't realize that it was using Flooring Labs.
Yeah. And it's
shout out to Free Lunch Cat.
Shout out to Free Lunch Cat that guy bought a lot of NFTs.
Oh my God.
At a time when it looked really bad.
He was looking like the savior when he came in. Like I remember when he was buying the apes and shit, people were
I
like,
wonder who it is. We probably know. Like we probably know him. It's probably some anonymous
it's
guy.
a small world.
Yeah.
When you are talking to all these teams and using all these protocols, do you also invest privately through the ventures, or are you strictly NFTs? So I'm imagining like you're getting hands-on experience using a bunch of these tools very early on, and then you talk to the team and it becomes clear like, oh, these people are unique.
Yeah, so I think like, we think about a lot about like what's the right way to get exposure. We historically haven't done the venture rounds alongside. We do from time to time if like the token is necessary to use the protocol. It's something that we're evolving our thinking on as it goes. But like what we found the arb here is like there's a lot. There is actually like a very meaningfully large amount of liquidity in like venture investment capital in this space. There's a lot of Web3 funds. Like that's not, and that wasn't so true for a period of time. But like it's definitely like, it exists, right? That's not where like there's nobody, right? There is very little on-chain liquidity in this space. And so for us, it's usually just better to be the stakeholder via owning the NFT, to be the stakeholder via providing liquidity, and like find some way to work out, because that's what like most NFT projects would rather you buy X amount of their NFT than give them that amount of money in a venture round, right? Most liquidity protocols would rather you provide X amount of liquidity than give them that amount of liquidity in a venture round, because a lot of people, like, for legal reasons, don't want to LP their own things, right? And so, like, you know, to me, it's like, I could have raised a venture fund, like, could have done that, gone that route, would have been interesting, know how to do that, probably would have made good returns. But, like, it's not just about money for me doing this, right? Like, for me, it's about what is our impact in the space? What gap are we filling? What gap needs to be filled? And I think there's two main gaps. One is, like, balancing institutional grade exposure with, like, degenerate trading is, like, a more interesting balance than you'd think, right? It's the first. And the second is, like, for this space, for NFTs to do the thing that I think they're going to do, that it sounds, you know, I'm guessing you guys think they're going to do since you're in this space, right? Like, for that to happen, you need a couple of things. You need that influx of institutional capital, but you also need, like, the infrastructure to exist, to have liquidity. Like, there's just the functions that need to be served. And, like, sometimes those functions are difficult for retail users to do. Like, sometimes it's like, how do you think about this risk? How do you think about the other, right? And so, like, it's important to me that we're coming in and, like, you know, okay, where are we most valuable to this ecosystem in benefiting the ecosystem's growth overall, right? Like, and this has become increasingly the case, is, like, it's always been surprising to me, like, we're a small fund by, like, any metric, right? But, like, how much we're able to, like, impact this ecosystem, even being a small fund, is, like, you know, it feels like an obligation, but also, like, a role that I am humbled to play, right? Is, like, it's important. Like, I want to be doing things that feel important and correct for the ecosystem. We've not done plays that I think would have been financially beneficial, because they would have been financially beneficial by, like, screwing something up in the ecosystem, right? And, like, I think that's a big distinction, is, like, our reputation is really important. And I think we want to do things that, like, a rising tide lifts all boats. Like, the ability to hedge, I think, is a rising tide, right? So we're happy to provide liquidity to Wasabi, because, like, it furthers the goal of, like, this being a more interesting, like, asset class.
No, I agree. I have a question about, like, exiting positions too. I don't know if you can talk about that, but, like, say, you know, you have this big bet on the Pudgies. They rip from 2 and you start buying them to 20 now. Is the fund like, hey, we're on a 5+ year time horizon, like, this is just a fluctuation in the road? Or is there, like, and, you know, okay, we're waiting for potential token or whatever? And I'm not saying just for Pudgies in particular, I'm just saying in general.
Yeah.
Or is it much more like, you know, December, you're looking for that, like, December 2021 moment where you're just like, I need to, like, exit? Are you looking for, like, liquidity and bids like OSF and Mando, where they had an opportunity to sell and they had to take it? Like, how does that go through your mind? Is you do really well on a bet and, like, you need to manage that position?
Yeah. So, I mean, I think, like this is different. Like, we're not like a venture fund, right? We're not just like, I'm going to buy and hold for 10 years and then, like, sell at the end of the 10th year, right? Like, you know, we actively manage our positions. We enter and exit them. I think, you know, sometimes if there's big price runs, we'll take a little bit of profit. Usually, though, like, our trades are more based on the changes in conviction for team, changes in conviction on execution, than they are changes in price. Sometimes it is just a trade. Like, we will enter positions that will just be like, entering here, we plan to exit here, and we're just going to do that, right? Sometimes we enter with, like, we're going to hold through a token. Sometimes, you know, we have the luxury of, like, again, I don't need to pay my credit card bills with this. So, like, our time horizon for us is flexible. But, like, if I'm like, I think this NFT is going to go down 70% in the next, like, couple of days, like, we're going to sell it. I mean, and you know, I think I'm very clear about that. Like, we are degen trading fund. Like, we will enter and exit positions, right? And
you have to manage your capital. It's like,
yeah,
especially, like, as a smaller fund, it's like you don't have that dry powder just sitting there. You have to, at some point, rebalance the deck.
Right. But also, like, you know, again, reputation is important. Like, we don't want to be known as a fund that comes in and, like, crashes your floor. So, like, you know, like, oftentimes we will exit positions over long periods of time slowly.
Yeah.
If that makes sense to do. Sometimes we'll, like, you know, but, like, it just is what it is, right? Like, it's part of what happens in all of these ecosystems. Is like, how do you manage that side of things? And where does liquidity, like, rotate to, right? so oftentimes, sometimes we'll make trades where it's like, well, we like both of these collections, but the ratio between them feels off. So let's like rebalance one into another. And, you know, I think that just makes sense, right? Like we're traders, we're here to make money. We're here to make money for our LPs. Like we need to be trading over time. We split up our wallets. A lot of our wallets aren't doxed, right? Like, and you know, that's how we operate.
What about for personal, like, do you trade all of your, do you have like a separate personal book that is like your own stuff outside of fund? Because you said 90% of your net worth is like in the fund. Or
Yeah.
Like, so you keep a small amount outside just to do whatever, obviously.
So like I have a small bag of NFTs left from the last cycle. It's like quite small. I'm allowed to sell but not buy. I'm allowed to claim like mint rights and stuff like that from that. So
Gotcha.
there's those. But like really, I mean, all of my like crypto activity basically goes in the fund. Like the rest of my assets are in like largely other
Gotcha.
stuff.
Are you like, you got the Vinny Hagar pants, you got the Creature World shirt, got the dickbutt hat. Are you like collecting any art on chain, or are you just like sticking to the streetwear vibes to support your favorite?
I like supporting the streetwear vibes. I said this when I came. I was like, I'm coming the D's podcast. I got to come correct. Like, you know, it's part of that. Like,
and the shoes too.
And
did,
the Vinny
did Vinny
shoes.
do those custom for you? at
Vinny
an
did
IRL?
these at Art Basel. I sat down and took my shoes off and put them on the table, and I was like, Vinny, would you like
He's
to
the
do
best
these?
at that. He can go for like 10 hours straight, just like doing people.
Yeah, and I would feel like I wouldn't do that to any other artist, but like I'm friends with Vinny, like, and I know that he loves like
he likes it.
because the thing is, Vinny doesn't want to talk to people at events, and so he's much prefer just drawing. And
I don't
so
blame
like,
him.
you know, and like, yeah. So like, that's where I got these. But like, you know, it's a little bit of a shame to me. Like, I don't think my investors would be upset if I bought art personally, like that I just liked. But like, at the end of the day, I think it's much cleaner, right? Like, I run a regulated legal entity. Like, we're an asset manager. Like, I don't want there to be questions about like, oh, well, you bought this. Like, if I bought a piece of art and it went up in price, and then
Why didn't you buy it for the fund?
exactly,
Like you
right?
knew that one-on-one was going to go up.
And I
10.
just don't want there to be a question of that. And so like one of the big shames to me of where I sit currently is like my own inability to just buy stuff that I like.
Magic cards.
Magic cards, I can buy whatever the fuck I want.
No one in the fund is like, yo, why didn't you buy Black Lotuses for us?
Well, actually,
Funny you should say that.
actually, some of my investors in my fund are also like big Magic collectors. And so I've been talking to them a lot. Like one of my LPs owns one of the 6 PSA 10 Alpha Black Lotuses.
Oh, wow.
Oh wow. That's sick.
And it's funny too, like if you look, like Magic cards is one of the best investments over the last 20 years. You know, so anyway, it's like, yeah.
Have you looked into any of the like real world asset trading card things? Like I saw one recently called like unbox.gg, I think. Like I literally saw it on Twitter yesterday.
Box.gg?
I think it might have been, yeah, maybe.
Yeah.
There's like Courtyard, I think is another
Yeah, there's
one.
Courtyard.
They
Have
do,
you
the
like,
packs
hey,
for
have you looked into
cards.
any of that stuff?
Yeah, so Box.gg is actually like a portfolio company of mine from before I launched the fund.
Oh, nice.
And yeah, they're doing really well. The CEO of Box.gg launched it a while ago, then went over to, actually was like, worked internally at Cool Cats during the last market, and then left Cool Cats and relaunched this. And they're doing really, really well. So that stuff's cool. They were doing like, it was interesting. So they were doing like virtual loot boxes. I don't know if you've ever seen like sneaker loot boxes, but they're doing like CSGO loot boxes. They were doing that with trading cards originally. Left Cool Cats, was doing it with NFTs. Their traction was like okay. Then they went back to trading cards, and the traction went like exponential. And it was just really interesting to see like, you know, different collectibles markets have such different consumer bases. And so, you know, it worked just really well with Pokemon cards.
Yeah. That was what I saw. I just randomly stumbled across their Twitter again, I think yesterday, and I hadn't heard of them before, but I thought it was pretty cool.
Yeah. And so Courtyard, candidly, I need to look more at stuff like that. A little bit of it is for me is like my trading card time is kind of my break from crypto.
You don't
and
want to
so
combine it.
like there is overlap. They will overlap at certain points, but like I want to go like play trading cards and like, you know, sit down with my very shiny legacy or vintage deck and like go play it with my other friends that play their very shiny legacy and vintage decks. And like, you know, I think real world assets are cool, but like the right way, like to me, it's not obvious how you make the right winning real world asset protocol. There will be a lot of them.
Yeah.
At the end of the day, though, I think that's the bull case for infrastructure, because the reason that how do you get real world assets on chain isn't like, oh my goodness, I can now trade gold. I don't know how to trade gold. You don't know how to trade gold. Gold is like the most manipulated commodity, right? Gold and silver are the most manipulated commodities by big. I don't want to trade against Wall Street. Like, that's the reason I'm in this job, is because I don't want to be trading against Citadel. I don't want to be trading against Rentec, right? Like, I don't want to be doing that at all. And so, like, how do you get exposure? But like, obviously, real world assets are coming on chain. This is going to happen. So how do you get exposure? You have to get exposure through when Rentec, when Citadel comes on chain, when those people look at like, what infrastructure will they need to use? It'll be exchanges. It'll be lending protocols. It'll be leverage protocols. It'll be perps. All that stuff, like the bull case on all that stuff is not just like, hey, NFTs use this and NFTs are a cool asset class. It's real world assets. You will use the same infrastructure as like degenerate, like PFP, dickbutt, whatever assets, right? Like, this is all going to come together.
Yeah. Yeah, that makes sense. I had another question on top of that, but I forget what it was.
I was just thinking back to like pack breaks on Pokemon cards. I think the reason the Pokemon cards work so well in that loot box mechanic is because I was watching Twitch streamers open up packs from expensive boosters.
Yeah.
And then you're paying a pretty big premium to like get your pack out of that booster to then watch them open it live. And it's like, you can just cut out that Twitch streamer middleman and just do it right on chain, or like right through a UI.
Yeah. Well, and what was cool too is like, so I mean, there's this very interesting thing, right? Where like most of the demand for trading cards is like the original printings, right? And so you see this happen. This happened egregiously in Yu-Gi-Oh, where like Yu-Gi-Oh is like, oh, everyone wants Dark Magician, everyone wants like Blue Eyes White Dragon, so they just reprinted them to infinity, right? And every set has those cards, and like all of it became less collectible, right? But what's interesting about loot boxes is the third-party loot boxes is the ability to like repackage existing things in the market and like sell it back to the market with the randomness premium, right? And so, versus like I can open a booster pack, right? And it's fun. Like, this is, they've figured this out in Pokemon. It's fun to open a booster pack and have a chance of pulling a Charizard. That's why there's a Charizard VMAX in like every set, right?
Yes.
And so, like, one of the things that they did with like at boxed.gg is like they have like, you can open a pack that's just Charizards, and you could pull either the recent Charizard or the old Charizard. But like, if you're Charizard hunting, like, you're gonna get one, right? And what's cool too is like, so when people are opening on stream, actually they're not opening packs that they own. People, the way that those streamers work is people buy packs through their store that the streamer has set up. The streamer opens it and then ships it to them, right? And so, like, in kind of a similar way on there, what they do is you open like a virtual pack, right? And you can either sell the card back to the platform, and like get money, or have them mail it to you, right?
It's
and
big
so,
that you can immediately sell it back. Like, that's a
Can
huge
immediately
that's cool.
unlock.
Yeah. Because like in your perfect world, you're never actually shipping anyone any cards.
Yeah.
You're just eating the edges of the.
Well, the thing is too, like for me, like I don't open boosters. I'm a huge trading card collector. I don't open boosters because like I'll open a Magic booster, right? I'll get a $20 card, but I only ever play with the shiny foil original printings, right? So I don't really care. So I want to go sell, but like, am I going to go ship this to someone? Like, no, right? So I just end up with these, and then like all the commons that maybe the commons will be worth something at some point, but they never will, right? And then I end up with these boxes and there's cards everywhere.
That's our basement right now.
Yeah.
I went through a 3-month period with Pokemon cards. It was between getting into punks and punks going off. I was just bored and like I wanted to rip shit.
Yeah.
And I still have all of it. I've never sold any of it. It's all in the boxes. Like half of it's still unopened.
The dopamine's great. And actually, so they just like yesterday, the tweet you probably saw was they just implemented a thing where you can trade. So if, let's say you pull like, a couple of Pokemon cards that are high value, but you don't want, you can trade them at cost for slabbed PSA slabs of like the card that you do want. And they'll mail you the PSA slab instead of the other card.
That's cool.
That's so huge. Like I cash in a bunch of like things I pulled yesterday. I was like ripping packs on this platform yesterday, and I cash in a bunch of stuff for like a PSA 7 Miss Magius. Because I like Miss Magius. So I was like, let's go.
That's fun. When you play MTG, were you ever playing like competitively, or did you how much do you think that like card game, strategy game stuff helps or doesn't with like the markets and trading?
Oh, it totally helps. I mean, like, it's like I've played chess competitively. Like when I in elementary school, I've played a lot of chess. Like we've won like the team event at like nationals like every year. Switch from chess to like fencing. fencing is a lot of cerebral stuff. Like trading card games, like Magic the Gathering is such a better game than chess. It's like not like asymmetric resources is so much more interesting because it's not memorization. I mean, there is some memorization, but it's just like, I mean, it's my favorite game, right? It's just such a good game.
Yeah.
And so like you look at like the number one thing that you learn across any of those activities is probability, right? And like this is why poker players are good at trading crypto is like you need to think about long tail probability really well, and it's hard to conceptualize. Like a bet that has like a 90% chance of going to zero, but a 10% chance of 12xing, you should always do. And this is a very, very, and like you can say that and it's like, yeah, the math, but like to psychologically just do that.
Yeah.
One of the things that trading card games and poker and those guys is just like having you make that decision many, many, many times iteratively, right? And it's really hard too to like, it is so meaningful. Okay, let's say, so, you know, let's say you think Blur could be 5 billion, the Blast could be 5 billion, 6 billion, right? Like, what do you think the chance is? And I'm going to say that the long tail risk on that is that the bridge doesn't come, right? The bridge is exploited somehow, bridging back from Blast. That's where it all goes to zero, right? How do you price in that long tail risk? What's the probability? Like, that's where things get really, really interesting because none of this math is very precise, right? Like, this is all like, how do you figure out probability? Now, in trading card games, it can be more precise, right? But like, you can be precise, at least so like in chess or like poker, like I think it's a lot, I guess maybe less so in poker, but in chess, like everyone has equal known information, right? You know, what you're going to do, you know, the math is like absolute, right?
Yeah.
In Magic and in poker, like, you know, your deck's contents, you have a guess at your opponent's deck contents, you know, your hand, you don't know your opponent's hand, you know the board, right? And so like the mix of known information and unknown information, you have to make certain educated guesses, right? And you say, well, I don't know anything about what they might have in their hand, but that's not true.
Because you've seen what they've played.
You know something about your hand, you just don't know exactly what they have in their hand, right? And so that is the same thing in the markets, right? Like, you don't know exactly what's going to happen in the markets. You have an but that doesn't mean you shouldn't try and get to the most precise guess. And the most precise guess is defined by taking in the most information and figuring out how that informs your estimates on what is going to happen, right? And you have to be very, very comfortable operating when you're like, yeah, I'm like, I think this is a 10% probability plus minus 10%.
Yeah.
That's a crazy statistical deviance, right? Like, like if you told that to someone in like any other, like, you're like, all right, like, good.
Good luck, man.
Yeah, 10% or zero
or
20.
Yeah, or 20%, right? It could be something, but like this is the thing is like, and I think this is actually the part of the math that everyone forgets to do is the confidence interval, right?
Yeah.
And like the confidence interval should matter a lot. I'm a big believer whenever I make a trade, I sit down and I say, these are the targets this way and this way, like up and down. Like, this is what could happen in the good outcome. This is what could happen in the bad outcome. This is what causes the good outcome. This is what causes the bad outcome. This is what I expect the value of the good outcome to be. This is what I expect the value of the bad outcome to be. And this is what I'm pricing probability to be in each, right? And this is my confidence interval about that price, right? And you then want to just take a step back, take all the information off of that like sheet that has anything to do with the trade itself and just look at that distribution, that risk profile, right? And sometimes you look and you're like, oh, like the first Blur season, I was like,
it's like I'm an idiot if I don't do this.
I mean, like, what's the downside risk? Like, I end up buying more NFTs. I do that anyway. Right?
Yeah,
Like,
I'm already actively purchasing
it's
NFTs.
so free, right?
Yeah.
Like so the downside risk is like a smart contract risk on the exploit on, like, you know, you're depositing ETH into Blur, like, you know, that's scary. They give you Blur ETH. Like, that's the downside risk. But like, you know, pricing smart contract risk is probably the hardest part. But like, that's how you need to do, I think there's two things that happen in the space, right? You have TradFi people come in and do TradFi math, right? And they're probably the smartest mathematicians. That math doesn't super work, right? Because you're assuming like an efficient market. You're assuming like not really having price impact. There's a lot of assumptions that get baked into most TradFi math that people do that like don't work in crypto. And you would expect TradFi people to do better in crypto than they do, but they don't, right? And the people who actually from TradFi who do very well are the people who are like retired from TradFi and were in Wall Street like 50, 60 years ago when things were super unregulated and were basically what crypto is today, right? And then like you have people who do no math at all, right? And like they're, you know,
They're vibes.
Me.
vibes only, and vibes I think outperforms the no math. But like I will make the argument that I think the optimal amount of math is like some math, right?
Yeah.
And it's
Definitely
like in
need some
between.
math.
And
No, I totally agree though. I think like I grew up playing like pretty competitive Hearthstone.
Yeah.
And then like I was very competitive in like auto battlers.
Yeah.
TFT and stuff like that.
Yeah. So I've been top 0.01% in Hearthstone and Dota Underlords, if you know those two.
Yeah. I topped out at like 300 legend or 200 legend on Hearthstone.
Yeah.
And then I, at one point in TFT, was top 25 challenger.
Nice.
And so like, but I totally agree though. Like the whole idea of just like understanding like your percentage outcomes. And also like, I think it helps too with just getting comfortable with the chance of being wrong.
Oh.
And like, I think that's something people are really bad at is like,
not only the chance of being wrong, but the experience of being wrong.
Yeah.
Often, right?
And
Like you made the right play and it ended poorly is a very difficult thing to emotionally grapple with.
And I was talking to someone about this recently, and we were talking about best ball NFL, like not even the same thing, but kind of a similar kind of idea of like, I think a lot of people who are participating in like competitive PvP markets or things like this don't even understand or like internalize what their own risk profile is.
Yes.
And so then they like go into this thing thinking like, oh, I'm very risk on. Because I'm in a market that is risk on.
Yes.
But then they don't actually trade and execute in a way where they are actually being risk on or like understanding what that means.
Yes.
And so then they like think they're doing a certain thing, but they're not actually doing that thing. And so they're doing like a nerfed version of that thing that's not good enough because they haven't like spent enough time really contemplating what it means to act that way. What deck did you play in Hearthstone?
I used to play Tempo Mage in Hearthstone. That was my deck. So I
always sucked at Tempo Mage.
So my experience with Hearthstone was I got to, was it Legend or Mythic? What do they call it?
Legend.
I got to Legend, and I used Hearthstone. I was playing way too much Magic the Gathering in a period of time, and I used Hearthstone to wean myself off playing Magic the Gathering, and then I was playing too much Hearthstone, and I hit Legend. It was like, I need to stop.
Yeah.
And I like, that was the same, like hitting Mythic on Magic Arena. Like, I need to stop.
The thing you said about just TFT and like adapting to metas and not getting focused on something that got nerfed. I think like I didn't really think about it until you just said it, but that is something that happens in crypto all the time. Like the meta shifts and you're like, oh, like this was working last patch, and being able to just like adapt every couple of weeks and be like, oh, like this is the leading ETH beta now. Like whether it's Blur or Op, Lido, it's like, oh, like the old stuff is not ETH beta anymore. Like, I don't know, when you watch liquidity move across chains, it's like, oh, well, like the new meta is Solana shitters or the new meta is Solana NFTs. And like being able to adapt to those metas is very similar to like TFT, where it's like, oh, they just fucking changed all the cards. And I gotta learn, like, that's how I felt going to Solana, was like, they just changed all the cards. Like, I don't have the same building blocks to use anymore. Like, I need to replace my mental model of like, what's the Aave? Like, what is the fucking Lido? And yeah, I never thought of it like that, but it makes a lot of sense.
Well, and also like one thing here too, like this is something that I guess I carried across is I think one of the, actually like when you enter a space, one of the hardest things to do and one of the most important things to do is figure out who the smart people are in the space. Like when I was fencing, like I became a lot better when I was able to recognize who the good fencers were and watch them. And like there are people who have good results who don't fundamentally understand the thing they're doing at a certain level, right? It's just like intuitive or they've got some, but like who do you look at and you say, this is what I aspire to do, or I think this person understands what's going on in a really elegant way, right?
Yeah.
Like in Magic the Gathering too, like there are certain people that I know from playing who I watch play. I'm like, you understand this game on a really, really deep level. And one of the things that is always interesting to me is I've talked to a lot of people, and I would say like there of the players like in New York and like the legacy vintage scene, there's about 20% of them who can identify the really good players, right? The other 80% can't tell the difference between the 20% and the 1%, right? But there's a 20% of people who look and they're like, oh, like that guy, Hank Zong, that guy, Roland Chang, like those are really good players, right? And then like you watch them play and talk to them. And like, I think in crypto, it's the same thing too, is like, especially in crypto, you have a lot of people who made obscene amounts of money basically randomly, right?
Yeah.
And you also have a lot of people who made obscene amounts of money because they're really, really smart and get what's going on a very deep level and they're interesting to have conversations with. And like, parsing out who those two groups are is actually like an incredibly difficult exercise, especially when you first enter the space and you don't know what's going on, right? Because a lot of people who think that they know what they're doing or say that they know what they're doing really, really don't on a fundamental level. And I think that that's like one of the more challenging things when we talk about top of funnel, when we talk about people for onboarding. Like one of the reasons I like Nick and Pio is because they make jokes about not knowing what they're doing. They're very upfront about it, right? And this is, I shouldn't say that badly about them. I think that they actually do know more about what they're doing than their jokes
They're
suggest.
actually our next podcast guest after you.
Yeah.
Oh, okay. Yeah. So they know nothing about what they're doing. They don't talk to them at all.
Well,
but,
let them know. You said they have no idea what's going on.
Tell them I said that. But no, like I think this is the thing too, is like, they're really good content creators, right? Like people, and so, but like there are some really good like people who you should follow, listen to, figure it out, but also like figure out for yourself what ilk of things going on makes sense, because there's a lot of different versions of it. And the more you understand one, probably the less the other stuff will make sense to you, right?
Yeah.
I remember thinking about this when I was learning fencing. My coach was of Ukrainian descent, came over to the US. Like there's the like Russian Ukrainian style, right? And I learned that style of fencing. It's very tactical heavy. It's not super physical, right? When I would go to a World Cup, the Korean team runs 10 miles to start their practice, runs 10 miles to end their practice. They're twice the width of me in their shoulders just on muscle, right? And like, I don't understand exactly what the like thought process of what they're doing is. And I could never I've taken lessons from Korean coaches like here and there, and it just doesn't make sense to me, right? Because I understand the other style, and the worldview that I have is this worldview. Both work.
Yeah.
But for me, I have gotten so far down this rabbit hole that I would have to unlearn so much to learn something else. And I think that's where like a lot of people like get lost, is like if you listen to a bunch of very smart people, they may all actually be very smart people, but they have completely different takes, right? Like some people are trading the 1 minute candles, some people are making 10-year bets. Like, you know, if you're focused on trading the 1 minute candles, trade the 1 minute candles. If you're focused on making long-term bets, make long-term bets. Don't try and figure out how to do both, because like, and I think people really underprice this. Like if you're making the 10-year bet, how much research you need to do to place that bet is way more, right? If you're trading 1 minute candle, oh yeah, like volume, like whatever, like we're aping, like, you know, that's my diligence, my 6 seconds of diligence to trade my 1 minute candle, right? If you're making a bet you're going to hold for 10 years, this would be like months of diligence, right? Like talk to everybody.
And you got to keep up with it too during the bet.
Talk to competitors, see what's going on, see how you can help them. Like, are you going to be net influential to your, like it's just a completely different game. And if you are like trying to do that diligence, oh my God, and I got to trade this 1 minute candle, like you just lose it, right? Like you can't do both.
Yeah, like I've definitely experienced that trying to trade shitcoins.
Yeah.
Where it's like I have done very well for myself in crypto because I'm a smart contract developer and I understand DeFi and I understand all these different things and I can position myself in a certain way. And then I'm like, let's try to buy some shitcoins, and I just get smoked every single time. Like I've had to come to the point of accepting like I do not understand that market. That is not the way that I think about these assets. And like I can have fun and do it because it's fun. Every once in a while I'll get lucky, but that is not like the way that I am going to long term be successful and win in this market, because it's not my expertise.
I mean, like, and look, like shitcoins are a funny thing, right? Like one of my favorite just like funny crypto experiences was I sat down to lunch with 2 of my good crypto friends, and one of them was like, hey, there's a shitcoin launching, should we ape it? We all aped, and we're like, and we finished lunch, and it paid for lunch. And we sold it, and that was, we were like, free lunch.
There you go. Yeah.
But like, and well, so there's actually a little bit more to the story, which is that it paid for lunch at the end of lunch, and we were like, okay, should we sell it? And one person, it was 3 of us. One person was like, yes, sell it immediately. Like, let's just pay for lunch. Like, what are you guys doing? And I was also of that opinion, but then I thought it was really funny to like mess with him. So the other person was like, no, we should hold it. We might go higher. And so we took an Uber back. It was like we had lunch in Brooklyn. We were taking an Uber back in the city, and the whole Uber ride was like, guys, please sell this shitcoin. We want it to go completely to zero. And the Uber ride,
that's the average
That's
shitcoin
how it
experience.
goes, yeah.
the utility and enjoyment I got from the Uber
Oh, it was
ride
well worth.
was
paying 2
well
lunch
worth.
bills.
We were playing 2 lunches.
Yeah.
Wait, we were sitting on the couch the other night, me and Weesh, and I was like, oh yeah, I'm gonna short this token. I'm not gonna say what the token was, I'm a fucking moron, but I'm like, I'm gonna short this token. Just like, I got a couple ETH and rollbit, whatever. And not even 45 minutes later, like I like look at my thing. I'm like, oh, where'd my position go? I looked at the price of the token I shorted, and I was like, texted him. I'm like, yeah, that's why we don't do that. Just a fucking idiot. Just lit some money on fire.
Yeah.
Like, I know better, but it's kind of like, you know, the rush of the gamble.
I know better, but
I know
But
better.
it's fun.
It's kind of like just going to the casino and throwing a bunch in a hand of blackjack. I mean, like, fuck it. Which I never do, by the way. Like, I'm afraid. Andy and I were at the Baja Bar, and I'm like, dude, I can't do more.
Yeah, and that's where we're different. I love gambling, and he doesn't like it.
Yeah, I'm like,
the thing is, like, I do so many flavors of things that sometimes feel so gambling adjacent, but with like math where at least I've psyoped myself into thinking that this is a plus EV gamble, that like things that I know are like, even if they're marginally small, like negative EV gambles often feel bad. I do not like casinos. Although my asterisk here is I did enjoy opening the Pikachu box, because when I was like in like, you know, when I was much younger, I collected Pikachus and I just wanted a random Pikachu, and that was fun.
Yeah.
But like in general, like I am not a gambling person, because like I want to do my math with my probability ranges and have something that's not like, oh, I lose.
Yeah, I've heard that perspective from a lot of like poker players, daily fantasy sports players and stuff. And so it's like, you know, my preferred avenue to risk money is daily fantasy sports or crypto or things where I feel like I have an edge. But I think I'm a bit different in that I also give me some alcohol and a craps table and I will have a lovely evening.
The other thing too is like I like betting on decisions that I've made, right? And so like if I were to like in the gambling realm, like poker is more interesting to me, magic's more interesting to me, like, you know, high stakes, whatever. But like I don't like it's like I don't love just like, oh, I know it's a coin toss, like it's either that or that. Like I've had huge swings in my portfolio and my net worth that are bigger than anything that I'm gonna ever put on the roulette table, or whatever, right? Like it's just, and like when I've gone to casinos with friends and stuff, like I'll just play roulette because I'm like, everything is just some derivative of a coin flip, and you get to pick the odds, and it's like easier to do the math on picking the odds on a roulette table.
Yeah,
like that's my like thing in a casino is like,
I like the craps table for the exact opposite reason, because I don't know anything I'm doing. I'm just rooting for not a 7, and I'm making the same bet anyway.
Yeah, I'm just like, these put the chips here, put them here. to me that all.
So I guess I gotta go play craps with you guys.
A lot of that stuff is a very
together,
social game. Yeah,
I think that's the big thing about craps. It's like not like, you know, poker where like someone wins and someone loses. In craps, it's like we're all winning when we make that bet. And then when a 7's rolled,
wag me, bro.
We're all losing.
Craps is the wag me of the casino.
Yes.
Yeah.
And then you could just have like a bunch of people at the table all throwing down shit, and they got that fucking whip thing, and they're rolling it around like. They're like real strict. Like I didn't know there was like proper form to shooting the dice, and they're like, get the fuck out of here. Like it was like a whole thing.
Yeah, that was funny. Oh man.
They looked at me like, this kid's never been in a craps table. They're like, throw the dice. Like you have to like make it either hit the backboard or pass a line or something.
Yeah.
And I like wimpily just threw them out on the board.
No, like no.
Yeah.
You gotta have that wrist strength, you know, flick of the wrist. Right?
I did. I just didn't know that was like.
My favorite thing is if you've ever gone to the craps table and you see like the old heads there, that like they've got their like whole thing of like how they toss it exactly, and like, but like clearly that doesn't work.
No, yeah, obviously it doesn't work. Yeah, they're like those perfect
But the
rolls,
thing
like,
I
if you
love,
slow down,
the thing I love is that I love looking them dead in the eyes, and you see the belief that it's working, right?
Yeah.
And that's what that's the sense I get that same energy whenever I talk to shitcoin traders. I'm
Yeah.
like,
The belief that it's
people who
working.
chart, people who do like technical analysis. I'm like, I love that for you.
Yeah,
like,
bro,
I
check
like
out
It
my-
may
believe in
not
this.
actually work, but it works for you because it gives you the confidence to do whatever the fuck you're doing.
This diagonal line is gonna hold. This is the third bounce. Like I'm telling you.
Yeah, just straight up, you know, bullish resistance, like bullish retrace.
Yeah, I mean it's gonna bounce off this ascending fucking line, and then it's just gonna go right.
It's got the
through.
Capricorn formation, you know, it's gonna rising moon into Libra over there.
My favorite,
like-
they got like the Elliott waves. They're like, okay, we're at like the bottom of the C wave, getting ready
use
to
a cup and handle. I know these terms.
Yeah, the Elliott, yeah. And I remember in the 2018 bear market, I was reading like I had a book on like the Wyckoff like market formations and like looking out for distribution, looking out for accumulation, and then knowing, you know, oh, this is like this spring, like right before the accumulation phase is done, they're just gonna shake us out one last time, and like that's what this one is, and then it's gonna go back up, and then reading the fucking Elliott wave theories, like I have had a convincing, you know, year where I was like, this is gonna unlock all the knowledge I need, and then you come out
I'm
of
gonna
it,
make it.
and you're like, this is all bullshit. Like,
So
like horizontal lines are like all I need.
So the thing that disillusioned this for me is like, so like again, like I have an economics degree from the University of Chicago. Everyone else I went to school with is a quant trader, right? And so I talked to them, and they're much smarter than me when it comes to math, but like I kind of generally have a sense for the math that they're doing, and the whole joke in that field is that they're just eating the lunch of whatever your trade is. It doesn't matter. Like the big unlock is understanding that in TradFi, it doesn't matter what bet you make. You're always just giving money to Rentec and Citadel. Like that's the huge unlock is like, they don't like, they're not even looking at really charts, right? They're looking at order flow in and out, and like most of the market for a while is them trading against each other. And that's very interesting. But when it's them trading against retail, they just print money, right? And so like, a big rule for myself now, and this is only true over like shorter time horizons, but like big rule for myself, stock market, I just buy and hold, because then you're not really like, they'll take their bips when, you know, market, you know, front running you or wherever, but like you're buying for a couple, like
You're not trading coin on the 1 minute.
yeah, I'm not trading coin. Like it's just, you're just not never, ever, ever, ever going to out trade Citadel. It's just not going to happen, because they have 500 people who are smarter than you sitting in a room collectively doing this thing. And they've been doing it for years and years and years. And they're really, really, really good at it. And like the idea that that you could outtrade Citadel.
2 books. I read 2 books.
2 books. Like, it's, I mean, go off, King. Like, I don't know. Like it's a lot of, like, but like, this is the beauty of the NFT space and the crypto space is like, there is no Citadel, right? Like I think crypto space, like when you're trading ETH and Bitcoin, there is, right? When you're trading like shitcoins, like there kind of is, especially when they're exchange listed. As soon as something hits an exchange, there is like algorithmic trading going on, right? NFTs, like not really. It's not that at all. And so that's why it's interesting, right? And my hope is that like in the next 10 years, my job will be completely become obsolete because those people will come in. But like the goal there is like have the long-term bag that
By the time that happens, you're up
when they're
multiples.
if Rentec and Citadel are trading NFTs, like I probably am retired on an island somewhere anyway. Like that's the goal, right? And so like, because those people do bring in volume, but I think that we will actually trend towards that over time, right? As the coin market has.
Yeah.
We have a question we ask everybody, and it is probably the most important question in terms of what I use to make the art for the podcast episode. I do all the thumbnail art. And that question is, if you were to write an autobiography, what would the title of the autobiography be?
Ooh.
Take your time and think about it. It's a tough question.
This is my mind is like completely blank thinking of the answer to this. I know, it's like an autobiography that ends now.
I'd say
Or-
open-ended.
It's open-ended. Like it could be like your autobiography when you think you're like 70. You're
Yeah, I
looking
mean, I
back
think
on
like one of the things with this for me is like, I hope that it's not a complete phrase today, right? Like I hope that there's more that ties it all together. I don't know, like, so this is the thing that I like believe, right? I think if you think really hard about like the meaning of life, that there like clearly is none. And I think you have 2 choices in life. You can find this like deeply upsetting, in which case you become a nihilist. And I think nihilist is a very rational thought process. Or you can find this incredibly funny, in which case you become an absurdist. And when I think about like, what do I do professionally, is I do a very professionally absurdist thing, right? And so it's definitely got something to do with absurdism. I don't. This is a very tough question.
Yeah, it is.
I mean, I like absurd. Like just be
Yeah.
absurd.
Just be absurd.
Yeah.
I like that. Yeah, maybe that.
There we go. I like it.
Yeah. You've caught me also because was a economics minor and a poetry economics major and a poetry minor. And so I think very deeply about
Words and
words.
meaning.
And so this is a
Well,
question that,
don't worry. When you write your autobiography, we're not going to hold you to it. You can change the title.
yeah.
It's no big deal.
It's a question that always causes people to pause. Like it's
Yeah.
never like there has
There's
been
been a
few.
couple people who were like, I've already thought about this. This is my title.
Here it is. It's coming out next week.
Yeah.
You got to sell it by my.
They actually brought it on
We
the
have a
pod.
signed copy for you. Like,
Yeah. Tweet me at David Dobrik.
Are there any things coming in 2024 that you're excited about, or any shout outs to anybody that you think are doing dope shit that don't get not a lot of love?
I mean, I think this is kind of already happening. Is like I'm excited to see smaller accounts on X that really grinded it out. That like I think when the tide came out during the bear market, you saw like who was swimming naked, who wasn't. A lot of people left. There's smaller accounts of people who stuck around who are going to be much more influential this cycle than they were last cycle. And I think we have overall a better crop this time. Like it gets better every time, right?
Yeah.
And so, I'm excited for just like the growth of what we're all doing here. I mean, I'm excited for, I think that like, we have major things happening, we have minor things happening. I think I'm excited. This is also a tough question. I don't want to forget people.
Yeah, it's tough when you say it and then recording's done and then you're like, oh fuck, there was like these 6 people doing these 6
Yeah.
cool I get that.
Yeah, I mean, look,
It's never a slight to anybody listening if like you're not immediately.
I think that like I'm excited to see the new builders coming into the space as well. I think one thing that I believe in, I had a friend of mine, Nick Uhas, who, he's early YouTube adopter. He has like the most watched video on TikTok from like 2015 or 16, or 19, one of the years. He has the most, so great content creator. He's got a Netflix special. I took him around at NFTLA like last cycle, and he kind of surveyed it. He was like, this is early YouTube. And I was like, what do you mean? He said, a lot of the people who are important this cycle are right time, right place, right? Some of them are very skilled. Many of them were just right time, right place. The really, really, really skilled builders are watching the space, but not participating right now. And a lot of these people will get washed out and leave. And like the next cycle, when it's been a little bit de-risked and people kind of know more what's going on, is when you see the people come in that are very good at what they do from external places. Like this was when like it wasn't just native YouTube creators. It was like people who were creating legacy media came into YouTube and like just blew up what it was, right? So this cycle will happen and people will come in, and this is where the really, really good builders come. And once they come, you'll look at who was relevant now and you'll be like, oh, like this is they just can't compete, right? And there's going to be a period of time when those people won't understand why they can't compete. And so like I'm excited for that. I think it's already starting to happen. You see this actually on like, I've been most impressed by like Solana builders, right? Like so there's a lot of experiences on Solana that feel better than ETH, and it's people who watched ETH happen last cycle build on Solana this cycle, and it's just like, oh, you learned, iterated, and this is better, right? And so, I think there's then this new meta of like, how do you adapt and work with those people, and how do you become part of it? But I'm excited to see more of those builders come in. I think we're very close to nearing the point where we see new things launch, where we see like new people come in that have resources and experiences that didn't exist before, right? And even like with Pudgy, for example, like Luca having a CPG background, you see how far he's taken that when everyone was starting to sell like hoodies and no one had a CPG background, right? Turns out it's not rocket science. If you've sold in Walmart before, you can get the pallet program in Walmart, right? Like if you know what you're doing, it's good. And I think we just didn't have that many people that like really knew what they were doing last cycle. And so, I'm excited to see more of that happening. I even actually think like Flooring Lab is an example of that. Like that team like clearly watched all of last cycle happen, watched a lot of tokens get launched. When you look at the tokenomics there, like that is a token that is elegantly designed, right? And when you look at even Blur, like Pac-Man clearly traded the markets, like clearly understands crypto pretty fundamentally, and
it already had past exits from companies.
Yeah.
And
and this is someone who like knows how to build a company, right? Knows how to build a company, understands the market. I mean, that's where you get really emergent things that happen.
Mm-hmm.
Yeah, I think we have a lot to look forward to in 24. I think it's a great way to phrase it, where we're looking at people who are experts at what they do now thinking, okay, this tech stack is de-risked. I can come in and put my own spin on it and execute on it. Because I put out a tweet the other day. It's like the market cares about what you do, not what you can do. Like there's a lot of people on paper that's like, oh, I hate to pick on the Moonbirds thing, but like I feel like that's one where it was like, okay, what can they do? Kevin Rose can do anything. What did they do? They did some dope stuff for art, but like didn't do much else. And like the market kind of weighted it that way.
Yeah, well, and I think that was someone who came in with an opinion of what was going on here, and it didn't play out in the way that person thought, right? And I think that's kind of what happened. And you see this really difficult situation of like, now what, right? And this is where like, I'm not gonna say to no fault of his own, right? But like I think had Kevin waited another cycle and entered and watched this last cycle played out, like I don't think they would have done Moonbirds. I think they would have done Proof Pass, and it would have been an art thing. And I think that
it would have been fine.
It would have been much better, right? And I think that like that's the benefit of someone who waited a cycle to enter, is you have the early adopters and then you have the wait a cycle but watch it. And even if remove the Web 2 experience, the wait a cycle and watch it people had, the wait a cycle and watch it people like should have more information when they're setting out on a path. And like it's easier to set out on a path with more information than to pivot a company after you've gotten more information. And that's really what's kind of going on here, right? Like again, like if they've never done Moonbirds, never done Mythics, never promised a token, never raised venture, right? Like Moonbirds would be Proof would be such a different thing. And it's sad to see. Like I think one of the other challenges that I've always had with art in the space is like it's so heavily concentrated by market cap in art blocks. I think that's a problem. And it's not to say I don't like art blocks. I think Fidenzas are beautiful. Fidenzas to me are like easily the most beautiful generative art that like exists. However, like, do I think an ecosystem can survive when there's only one company that runs the whole thing? No, I don't even think it's good for art blocks that it's the only one that like does the thing that it does, right? I think it would be really healthy if there's at least two, right? Like I think actually the same way about Blast, Blur, and like Flooring Protocol is like, it's actually good that you have two different, very different takes on like liquidity and trading and NFT space that exist simultaneously, and they benefit each other, right? That's maybe a controversial take. I'm not even sure if those founders agree with that take, right? But I think if you're just stepping back and looking at the ecosystem, you need two. And I think, and I actually even think like Snowfro would probably agree with this. Is just like, not to put words in his mouth, but I don't think it's a bad thing.
I think he's very much a rising tide lifts all ships kind of guy.
100% is like, no, I've seen him do this too. Is like, I think like I'm excited too for the art market to feel healthy for me means that there are other projects outside of art blocks that have similar market caps.
Yeah.
And I don't think it's like, you could say it's, I think there's two arguments. One is like, we don't have the talent, and I just don't think it's that. I think that talent will continue to come in. I think that as that happens, there will be others, but we also like, there needs to be other business people that can make it happen. And it's tough. It's really tough because unlike OpenSea to Blur, like art blocks isn't this like weak incumbent, right? Like it, you know, and I don't think it's even like toppling art blocks, but being like a meaningful competitor to art blocks. Like we saw Rarible, Super Rare, like people have who were even earlier than them, like tried and they just executed better and got culture behind them. And I can't even sit here and tell you why. Like it's never fully made sense to me why. And this is part of why I don't trade the art market, because I just don't get it. And it's not because I don't think there's a reason. It's because if I don't get the reason, then like, I'm not just gonna be, oh, like there's just a reason. Cool. Like I want to understand it at least at that level.
It feels like the reason to me is like mostly vibrational from Snowfro coming from punks, having claimed all the punks, making that his community for like the better part of 4 years as a mod there, building up this whole, I don't know, like everyone had all this good faith and goodwill and so forth. They still do. Like he's built it up even more, but it's like, I didn't know when I got into it, it was going to be what it was. It was just like, oh, we love Snowfro. This is cool. And we like ripping packs. Like it was the same time where I'm buying Pokemon cards.
Yeah.
And it's like, yeah, we're just ripping packs online. And then, oh, like there's billionaires, like, you know, the Howards coming in buying this. Like, what the fuck? And then it like has this like mimetic desire mode where people raise a bunch of money. They have a fund. They're like, oh, we need our Fidenzas. Oh, we need our ringer. And it's like, you have a couple funds come in a year, and that's, if they have that mental model of like, we need the blue chips, it's this like self-fulfilling prophecy, but it is not, it's a very like, it's not a contrarian bet. Like it's the bet that everyone's making. So,
of course. Right. And like, well, so here's an interesting question to you, right? Like, do you think, so like a lot of stuff last cycle came up through punks. Then there's like stuff coming up through punks, stuff coming up through apes. Do you think the punks community plays that role today in the NFT ecosystem?
No. I think it stopped playing that role sometime in the middle of 2021.
Yeah.
I think you can argue between the very beginning, it would be like, in my head, Hashmask to that Christie's auction in March 2021. And at the end, it would be like after Meebits were out, after apes flipped them. Like it was. And so kind of a.
Do you think that community, like that there is a community that exists today that is that, or do you think it's like, how do you think that like, so you're saying like, okay, the moat is that he came out through punks. It's like this, right? Obviously. Okay. Makes sense. What do you think like the moat, like where do you think another like art blocks could come up through? Like what is the equivalent of that today, or does it not exist?
It's hard to tell. Like art blocks was unique in the sense it was marrying generative art with the blockchain. And I don't know what other, I don't want to say use cases, but like I don't know what other new things could come from like a Pudgy related ecosystem or like a ape related ecosystem. I also haven't, like there was a time in my life where the punks Discord was the only place I wanted to spend time. Like it was an open Discord. Anyone could join it. And it was the best place for NFT knowledge. And then like I haven't found a place like that since, other than private group chats that have been curated over time. Yeah. There's no like public meeting ground where people can just go and, like you said, find the best people in the space and like try
very
to
high signal.
Like in the Artblocks Discord, it was very clear that like these are the top like 1% of the 20%, like within this Artblocks Discord. And like it was like Snowfro, it was Von Mises, it was Dave, it was Danny, it was Justin, it was Cry, it was Trill. It was all these people who, when you asked them about their takes on what they were doing, it was a very well thought out thesis. Von Mises always was like, there's 50 million millionaires in the world. There's only 10,000 punks. If like 1% of the millionaires ever want a punk, like these things are fucked. And he was like putting that out when they were like $200, like in the Discord. And then like
he's the fucking man. I love him.
Yeah, and there was just like this very clear, like, oh, these people are thinking like 5+ years down the road. Like they're not just like, oh, I like this orange side, I'm a buyer and lister for a little bit higher. Like Danny comes in, the guy who sold Danny like all his nice punks. He thought Danny was an idiot. Like he thought Danny was like the last whale who would ever buy this shit, because he had no idea that like him selling the 7 trait for, I don't think it was $100,000. It might've been like under 100 ETH. He thought like that was the top. Like there was no like, oh, maybe this will be worth 1,000.
Which like is a reasonable thought.
Oh, 100%. Because they bought them for like, they're buying their punks under $100. They're buying their nice grails for like 1,000 or 500. And when it's now worth 50K, it's like, oh, my thesis played out. But then there was a whole other group of whales looking from the side of like, this survived a cycle. This looks like there's something here. Like,
yeah. No.
And I think like the Pudgies have been a great example. Like what you said about the founder kind of needing to be the scapegoat and then bring in a new founder.
Yeah.
Like there's like a cleansing that happens.
Well, it's like, who is your founder to you? Is your founder the person who let you down 95%? Or is your founder the like person who's like resurrected your bags?
Who like saved your project?
Yeah, like you've come in
and that's
you
just
are
like a very rare thing that I don't think you're gonna see copied very much.
No, it's hard to.
So I actually don't know that I fully agree with that.
Yeah.
I think that there is room for more Rug plus M&A. I think that we will continue to see that thesis play out.
From the 2021-ish cycle of stuff where it like came out, had a community.
People who were around then kind of remember it. They might have old bags of it. You see someone accumulate a bunch, buy the project, and like it's not that hard to resurrect something from zero to something. It's obviously very hard to resurrect it from zero to like big, but like, you know, I think buying relevance is increasingly tough. Like if you have a lot of money, you come in, you want to buy relevance, buying a project is actually one of the cheaper ways to do it, right? Like, okay, here's a question. Someone net new to the space, no one knows who they are. How much do they need to spend to be like relevant? Like what's the best use of capital and how do you want to spend it?
Biased, buy a hoodie punk.
Tweet
At me, and then I retweet you and say, no. I mean, we have seen people do that.
Right, yeah.
Come in, buy a hoodie punk, buy an expensive ape, but you're only flexing to like one group of people. You're not like putting yourself in a position to save them. It's like a different type of relevance. Like you mentioned Manchi.
Yeah.
How much do you think he lost?
I think he probably lost like 3-4 million.
And then do we think that clout that he got was worth it?
Probably.
To him?
I mean,
like, is it
he
good?
also doesn't really need the money.
Is it good clout? Like, is that the type of? Does it matter? Is like any clout?
Maybe, right? Like people who are controversial in crypto, like I think that like if you know, I don't say that he will, but like if he launched like a rug or something, like how much would it generate, even if everyone knew it was a rug, right? Which is like a silly thing to say, but like we watched like, you know, the orange squares that everyone was trading, like if you like, you know, like this happens, right? Like what's the market cap of like the influence that someone had, right? Like, you know, how much did he make back on like friend tech? Like how much, like there's all these other like, crypto is interesting in that like influence is like not so hard to monetize, right? Even if it's not a rug or just like a project, like if you can like, I think what the level of influence he bought in the NFT space for was really, really cheap. I think it was one of the most capital efficient uses I've seen of buying influence. This is a controversial take. Some people might not agree with it. And, you know, it's also influence that a lot of people don't like him, right? But like,
you know who he is, right? Hate him or love him, you know.
But you have heard of me.
yeah, exactly, right? But like, I think that, you know, if you're making a bet on a lot of things, right? Like you see even like when Memeland was coming up, like Ray bought the key for like 1.5 million, right? Or 1.3, like the Dookie Dash key.
Yeah.
Right? Like that was, I think, a very similar exercise. And I think that like, okay, that was like 1.2 million. I don't know what you think you can resell that for today, right? Certainly not.
But
that
it probably
price. Sent
the market cap of the Memeland ecosystem up more than the money spent to acquire the key, or like the
But like okay, but this is where like, okay, it's sometimes hard to like think about orders of magnitude, right? That was an order of magnitude thing on similar size to what Machi did on Blur. And I think they were both successful stunts, but Machi's was more successful, right?
I forgot he bought the key. I'll never forget Machi.
Right. But like,
Can't forget him.
but like, again, like this, it's, people would buy, there was the beverage band that bought the million, like people would spend $1 million to $5 million in crypto very regularly just for like clout or influence. Like this is not a huge amount of money in crypto to do, right? We saw this last cycle of DeFi protocols doing stuff like that, where they just buy a bunch of stuff just to like make a splash and see people will come in. And so, buying a project, and like if you're going to launch a DeFi protocol and you have a marketing budget, buying a project is probably a good use of your marketing budget. Like if I was launching a DeFi protocol and I wanted to spend like, and some projects are not that expensive, right? Like I want to spend $500K to $2 million on a marketing budget. Buying and resurrecting an NFT project, you can stake the NFT to get points associated to that DeFi, is like probably a very cost efficient way to launch a project.
Yeah, I mean, I can think of a lot of candidates in my wallet.
And like, yeah, so like this is the bull case on like a lot of these sort of dead projects, but like, I think that this market is more interesting than people perceive it to be.
Yeah,
Yeah, that makes sense. I guess my like question around that is whether if you had that same amount of marketing budget and launched your own project, that could, I think a lot of that depends on your execution as a founder. But I think there's like the case we made of don't buy an old project, launch a new one, and use that $1 million some other way to help market that
100%.
It depends on if you have attention or you need attention.
Yeah,
like if you already,
there's a
if you
million
have the
different
attention,
things, but
you can sell the NFTs to raise. If you don't have the attention, you're looking through the trash heap of 2021, and you're like, what is like Lindy? Like what? When I say it, does it make people think like, I remember that?
Yeah,
and like hopefully it's like not a horrible memory. I mean, even if it is, like I think a lot of people at Penguins are like, oh, I remember that, but I didn't like the circumstances at which that went down. And then over time, it just changes. It's like, you see what's happened, you see what's been done, and you're like, okay, I can't really dispute the fact that change of hands and the execution has been there, and then you come around it.
Yeah, and again, like it's not the only way. It's just an interesting way, right?
No, I totally agree.
And
someone should buy hash masks. I don't even know if they're available to be bought.
Someone should buy.
Everything's for sale for the right price.
I don't even know if you could like get in contact with the founders of hash masks. I think.
Bring back Euler beats.
But yeah, you see, like,
oh my god.
And like this is question too. One thing that I think is also very underappreciated about acquiring a project is legal risk. So one thing is, I think there's actually a larger group of people who are willing to buy an NFT project that already exists than sell NFTs themselves, because as we saw with like Ripple's case and other things, selling crypto assets carries more regulatory risk than like buying them, as long as in the M&A deal, the person who issued them assumes all legal risk for selling them. And like that is actually like pretty meaningful.
Yeah.
I think Lucas talked about that before too. We are getting close to the time, I think, where we have to cut it. And
yeah, I think so.
Thank you for coming. I know this is super last minute. I really appreciate the fact that you were able to get here in like record fucking time. And this has been one of our best episodes of the week.
Yeah,
so
this was a lot of fun.
Thank you so much.
Better be. No, thank you guys so much for having me. And yeah, go pee. I'll do your thank yous to an empty chair.
I know that.
For those of you listening at home, I'm doing my thank yous to an empty chair because Deez is in the bathroom. But thank you guys so much for having me. It's been great. Hopefully people learned something, enjoyed something. If you make life-changing money, take it off the table.
It's not life-changing money till you change your life.
Yeah, be careful with leverage. Don't use it responsibly. Don't gamble. And let's just build something cool together. So thank you guys so much.
Yeah, thanks for coming on. It was fun.